and ready for the second session. We will be covering topics ranging from the beneficiaries of Digital India, the size of opportunity, what to consider while deciding to invest in platform and new age companies, how to determine competitive advantages of platform, whether to invest in technology companies or play this theme in some other manner, growth prospects of large IT service companies, and case studies related to this topic. Last request for everyone to join us. I would like to invite the chairman, Shruti Agarwal ji from SMC, who is also our gold sponsor. Please invite her with a clap. I would like to invite our keynote speaker, Ashish P. Sumaya ji, who is also our silver sponsor from White Oak Capital Mutual Fund. Sir, you're welcome. Our moderator for session 2 will be CA Manu Karol ji. We would also like to invite CA Anil Maheshwari ji and CA Sunil Gupta ji to join us on the dais. I would request the moderator of the session 2, CA Manu Karol ji, to please introduce the chairman and the keynote speaker.
Thank you, Asta. Welcome all advisors, all members and seniors. Without wasting time, the topic is quite important, Digital India. As we all are aware how the economy has transformed over, the ages. There was a time when we used to leave home, and if we had left our purse by mistake, we used to go back home. But today is the time, if we've left home, the purse is not important, but the mobile is much more important. So that shows how the economy has transferred and, the digital transactions taking place. Anyways, without wasting time, first of all, I would like to introduce Shruti Agarwal, the chairman of the session. Shruti is a director at SMC Global Limited and leads a technology, corporate, finance, and gift city operations teams in the SMC group. Holding an MBA from London Business School and a fellow from the Institute of Chartered Accountants, and after completing CFA from CFA Institute of USA. At SMC, she's spearheading the technology transformation, expanding the in-house team, handling roughly around about 135 employees, and establishing in-house capabilities for products development, reducing vendor dependencies under her leadership. She has successfully launched the mobile trading app, which has been developed in-house. So, the second keynote, with this I would like Shruti for the,
Good afternoon, everyone. I would like to start by thanking BVSS to give me the opportunity to speak on this platform. The topic that I'll be covering today is Digital India and investing in Digital India. IT services in India, they play a very crucial role. They contribute around 7.7% to the GDP of India. And it is expected that by 2025, India IT services will be contributing 10% to the GDP of India. And moreover, the IT service sector is one of the largest export service and is the largest driver of export revenue of India. And, India is currently serving 55% of the technology service industry globally. So global market of technology service is around $190 billion and India is serving 55% of it. And India is able to do so because, there is availability of highly skilled professionals at a lower cost compared to other countries. This is about how tech services is crucial in tech sector is crucial for Indian economy. But as an investor, from an investor's point of view also, technology sector has always been an interesting investing avenue. Why is that like technology serves an attractive opportunity? Firstly, because these companies have very low capex, almost no capex. That's why they have limited or no debt. The scalability of these companies are very high. Then, due to this, they are able to focus on providing services, which means they generate high returns and high ROE for the investors. Whenever we invest in stocks for long term, we look at fundamentals such as financial ratios, PE ratios, return on equity, the quality of management team, market cap. These are all the factors we will have to look at when we analyze a technology company. However, there are more factors that we will need to consider. What are the factors? Like, what kind of technology service or the product that the company is providing? What is the demand for that product? And if there is demand, what is the target addressable market, and what is the size of that market? Is the company using the latest tech? That also becomes very important. And what is the future vision of the company? Like, will the technology go obsolete in coming time? Are they investing in research and development of technology? One example we all have seen is Nokia. They were investing in the wrong R&D, in the wrong technology, and that led to their downfall. And moreover, in a country like India, understanding the regulatory landscape also becomes very important. So whichever company you are analyzing, it becomes important that what regulatory framework does it fall into. Like, if we see sectors such as cryptocurrency or gaming tech, these kind of sectors have highly been challenged by the regulatory perspective. So that these factors become very important. Like, I would like to give an example of one of the latest IPO that came just last week, Tata Technology, how these factors which I spoke about fit in that. As you all know, you must be aware that Tata Technology IPO was a success and it was oversubscribed 70 times. So let's deep dive and break down why it was successful in terms of technology. Firstly, Tata Technologies is serving the target market of automobile and aerospace industry mainly. There is a large demand for technology in this sector. So their TAM is bang on. Secondly, Tata Technology is using latest technology, like they are heavily investing into EVs. Their technology is related to electronic vehicles. And even in aerospace, they are using the latest tech. So they are ahead of their competitors in terms of tech. Thirdly, the funds they have raised, their plan is to invest that fund in artificial intelligence and machine learning. This gives us confidence that their future vision is right, that the technology they are betting on is what is the latest in the market. So you see how these kind of factors, if we combine, it is important for us to understand what the technology company is providing, not just invest in technology company because it is technology. Moreover, as an investor, one thing that we should keep in mind is technology sector is highly dynamic. Like, someone asked a question in the previous session that how often should we assess our portfolio and look at the stocks. When investing in technology company, you will have to look at it periodically because technology is evolving very quickly, and if necessary, as an investor, you will need to reallocate your portfolio considering which company is going ahead. So, now this I spoke about technology, typical technology companies. But my topic is Digital India. And when we talk about Digital India, we can't ignore the digital startups or the new age tech companies that have made to the Indian stock market. Here I am talking about companies such as Paytm, Zomato, Nykaa. We have seen all these stocks were listed at high valuation, and now they have been trading at a discount. So it is very important for us to understand that the KPIs to track these stocks, the new age companies, will be different than to the KPIs we use to track the more established or mature companies. The valuation of these companies are mostly based on compounding growth and future profits. So this makes these stocks a little more speculative in the listed space, because either they will grow exponentially and give you very high returns, or they could also, if you invest in, not spread your basket, they could also act as a wealth destroyer for you. So how do we assess these companies? The key to assessing these companies is basically understanding the value proposition they are providing and the kind of growth rate we expect. And yes, growth rate has to be exponentially year on year, and mostly understanding what is their path to profitability. There are a lot of young investors in the audience, and being a young investors, it gives you an edge in analyzing these companies, because you can relate more to the value proposition these companies are providing versus a more seasoned investor. For them, it might be difficult to understand the value proposition of these companies. So now, if we talk about digital adoption is not limited to new age companies or technology companies. Digital transformation is happening by traditional conventional companies, because they have realized if they don't transform themselves, in years to come they will be obsolete. They will not be able to compete with the new age companies, and they want to reposition themselves to to compete and be relevant in the dynamic market. Like we have seen in sectors such as consumer, auto, FMCG, finance, all the companies are investing heavily in digital technology to revamp themselves. In context to the Indian stock market, one of the examples that I would like to state here is the stock Jyoti Labs. So if you see the stock Jyoti Labs, they have heavily invested in digital technology and innovation, and through that they have expanded the distribution network in rural areas and their product assortment in urban areas. This has made Jyoti Labs able to deliver double-digit year-on-year growth in revenue and profits. And if you see the stock price of Jyoti Labs in last 6 months, it has grown double, from around 200 rupee per share to 400. So, these are the things we need to keep in mind while analyzing how technology can have an impact on companies. Lastly, I would like to mention, in order to understand which companies will make big in tech, we need to understand what are the emerging trends in technology. I would like to state 5 emerging trends which I believe are key to understand technology companies and could play big role. First is big data. So big data analytics, what companies are doing is receiving the data of consumers, doing regression and analytics on them, and deriving informed business decisions from that data. Like Amazon. What Amazon does, it analyzes all the purchases that consumers are making, the products that they are seeing, and they present the recommendation accordingly, which helps them to increase their sales. So first being big data. Second is artificial intelligence. Like artificial intelligence is nothing but making a computer mimic human capabilities or even go beyond human capabilities. Like we have seen, like smart devices like Alexa, Siri, Google Homes, and in fact, you all might have heard of Chat GPT, or Google yesterday only launched Gemini. So all these AI capabilities will also play a big role in next tech wave. Then thirdly, cloud computing. So cloud computing, you will be surprised to hear that Amazon, we see Amazon as an online marketplace, but 70% of Amazon's profit is coming from its cloud computing division, its cloud computing segment, AWS. And AWS, the segment AWS has played a major role in bringing Amazon to the top 5 market cap table in tech stocks. Third is a virtual reality. Like Facebook is investing a lot in making virtual reality, augmented reality, a reality, not a distant future. Like how in workspaces, how we can talk to our loved ones in virtual reality. Then fifth, often ignored, is cyber security. So when companies are transforming themselves, cyber security becomes a very key, crucial part which companies often ignore. So whenever you are analyzing a tech company, you need to see if their cyber security practices are there in place properly or not, because digital attacks are also increasing. See, some of these technology which I have mentioned, the 5 technologies I've mentioned, are already being in use by the companies. However, like technologies such as artificial intelligence, they are being used by companies in a very limited way, because the companies are not yet figured out how to use AI capabilities. So I personally feel that the next big tech revolution will come when the companies are able to exploit these technologies properly. When the companies are able to use this technology, the tech companies' growth will increase exponentially, and thereafter, that would be the right time to invest heavily in tech stocks. That would be all for my side. Thank you. Thank you.
Thank you, Shruti ji, for your kind words. Now I would like to invite our keynote speaker, Ashish P. Sumaya ji from White Oak Mutual Fund. Oh, please. I'll also invite Manuji to introduce him.
Thank you, Astha. Ashish P. Sumaya ji is a holder of Bachelor of Engineering at Polymer Science from Pune University and a Masters of Management Science and Finance from NIMS, Mumbai University. Prior to joining White Oak Capital Management Limited, Ashish served nately for 8 years as a Managing Director and CEO at Motilal Oswal Asset Management Company, where, starting with about 13 crores of assets in 2013, Motilal Oswal grew to 42,000 crores of asset management, portfolio management services. Prior to Motilal Oswal, Ashish had been with ICICI Prudential AMC, and Ashish has over 20 years experience in business strategy and management, process-driven sales and distribution, product development and marketing of investment offerings. He's been engaged in India's private sector asset management industry for pretty much the entire growth trajectory post 1998. So I would like to, without wasting time, Ashish P. Sumaya ji to take the lines.
So, first of all, I'd like to thank the organizers, Mukesh ji for referring me to come here, and Puneet ji for inviting me. It's my pleasure to be here. Thank you very much for inviting me here, and thank you very much for the good context that you already set. So basically, what I'm going to speak about is what type of investment opportunities are there in the digital landscape, right? And what I've seen is that there are a lot of young people in the room, and it's most imperative that everybody follows this whole landscape with open minds and benefits out of it. Because the thing is that it's one thing to be an economic participant and contribute to the growth, but contributing is not enough. If you're contributing, you should participate also, right? I mean, being a consumer, you can be a consumer and you can contribute to somebody else creating wealth. But for you also to benefit out of it, you should be a participant also, correct? So what I would do is, before I get into the presentation, I just, maybe you can speak from wherever you are sitting. Digital companies में investment करने की जब बात होती है, तो सबसे पहले आपके माइंड में क्या आता है? अभी आप देखें हैं कि lot of companies are getting listed. In the last 4-5 years, many of them have got listed, correct? And इसके ऊपर बहुत चर्चे भी बहुत होते हैं. एक तरीके से controversial topic भी है. So what comes to your mind, when somebody talks about investing in digital companies, तो आपके top of mind क्या आता है आपको? Profit है कि नहीं है? Okay. What else? Sorry? Track record. Okay. Sorry? Overvaluation. Okay. Anything else? Sustainability. Runway for growth. Shell company. Okay. Sorry? Who is driving the company? So actually, see, the reason why I ask this question, normally wherever I have to speak, I always do this because it's better to capture what is your top of mind. Because क्या होता है, PowerPoint में तो slide दिखाते दिखाते चले जाएंगे, आपको जो आपके top of mind है वो cover नहीं होगा, right? That's the reason why I asked you what is your top of mind. So what I'll do is, first briefly in 5-7 minutes I'll talk about the issues that you have raised. क्योंकि क्या होएगा, अगर आपके माइंड के इश्यूज क्लियर नहीं होंगे तो ये स्लाइड ऐसे ही, राइट? So 3-4 things I picked up from what you said. See, first thing is like this. If you were in America in late 90s or early 2000s, like just to give you a background, for example, I am the CEO for White Oak Capital Mutual Fund, and I work for our founder. Our founder is a gentleman called Prashant Khemka. So Prashant started White Oak in 2017, and we are probably the largest FII investing into India, right? Because most FIIs which invest in India, they invest as a basket, like global equity, global emerging market, इस तरीके से. लेकिन अगर India dedicated, specialized on investing only in India, in that probably White Oak is the largest FI with over, say, nearly $5.5 billion. From world over, we have raised $5.5 billion, and we are investing it into listed Indian equity. And before starting White Oak, why I gave this background? Because before starting White Oak, Prashant, who's our founder, he was Chief Investment Officer for Goldman Sachs. And he was an IPO investor when Google got listed in US. So what I'm just saying, and in our team, it's not just Prashant. Of course, we have 42 people. It's the largest fund management and research team in the country. Like any mutual fund company or any asset management company you meet, they'll typically have 10 to 12 analysts who cover 350 to 400 or 300 companies. We have 42 analysts and we cover 700 companies in India, right from large, mid, small, micro, whatever you call it. And plus, of course, we have research teams in Spain and Singapore also, because outside India, we invest in global emerging markets, global equity, multiple markets. ये background में आपको क्यों बताया? The reason why I'm saying is because there are many people in my team, in our team, who have invested in these digital companies for nearly 20 years. Okay? And I'm not here to, when I talk about this, 2-3 disclaimer मैं पहले बोल देता हूँ आपको. I'll answer your questions, but 2-3 disclaimers I'll put first. First thing is that anything I say, do not take it as a recommendation. Okay? Anything I say, take it only as a plea to you to keep your mind open. That is first thing. Second thing is, I am not a portfolio manager or a research analyst, so I don't have to defend any decisions. I have been 25 years in the industry, and I worked with multiple research teams and portfolio managers. तो मेरे को कुछ, I don't have any such thing that I have invested in a company, so I'll back it or something like that, right? I'm just talking like one of you as a observer, correct? And the third thing which I'll tell you is that when there is something which is happening in the landscape, the easiest thing is to diss it or discount it, correct? जैसे I'll give you an example. जैसे डिजिटल कंपनीज की बात होती है ना, तो सब लोग क्या बोलते हैं, अरे ये लॉस बना रहा है. भाई आप मेरे को एक आदमी बताइए जिसको नहीं पता है ये लॉस बना रहा है. शो मी वन पर्सन who doesn't know that this company is making a loss, right? So please understand, market does not react to things which everybody knows. Market will only react to things which few people don't know, okay? So never start a conversation by saying अरे ये सब बकवास है, लॉस कर रहा है. किसको नहीं पता है कि लॉस कर रहा है वो तो बताओ, correct? Everybody knows they're making loss, so there is no special surprise in it. Market will not react to something which is already known by everybody, right? And 2-3 other things. Say for example, if you find that there is an entire landscape which is changing, okay? जैसे मैं ये नहीं बोल रहा हूँ कि इंडिया में जो कंपनीज है वो सब गूगल और अमेजॉन बन जाने वाला है, nowhere close. But if you see that something is changing in the landscape, right? It behooves you to try to understand what is changing before you actually conclude that it is not even worth talking about, correct? Because नहीं तो क्या होगा, 10 साल के बाद ऐसा बड़ा बन जाएगा, फिर देखना पड़ेगा, correct? So never discount something before it actually, right? And the last thing I'll tell you, आप लोग here, see, you must have heard in my background, I am not a chartered accountant. And I am a postgrad in finance, but I didn't go to college. I was working when I was studying. तो मेरा तो अकाउंट्स और फाइनेंस का नॉलेज आप लोगों के मुकाबले में आप समझो कि कुछ भी नहीं है. लेकिन आप एक इतना सिर्फ समझ लो कि जब एक स्टील कंपनी सेटअप होती है ना, वो 15 साल लॉस करती है, लेकिन आप उसको सब कुछ कैपिटलाइज करने को अलाउ करते हो, करेक्ट? ये जो कंपनियां हैं, इनका पहला 5-7 साल है ना, 10 करोड़ 20 करोड़ लोगों के मोबाइल के अंदर घर बसाने में निकल गया. उसको आप कुछ भी डेप्रिसिएशन एमोर्टाइजेशन कुछ नहीं अलाउ करते हो आप उसको, उसका सब कुछ आप राइट ऑफ कर देते हो, राइट? और फाइनेंस के किताब में क्या लिखा है पता है? वैल्यू ऑफ अ बिजनेस इज प्रेजेंट वैल्यू ऑफ इट्स फ्यूचर कैश फ्लोज. वैल्यू ऑफ अ बिजनेस इज प्रेजेंट वैल्यू ऑफ इट्स फ्यूचर ईपीएस, पैट, एबिडा, ऐसा कुछ नहीं लिखा है. कैश फ्लो लिखा है, पैट, ईपीएस, एबिडा नहीं लिखा है, राइट? So first of all, though, you need to understand that our industry treats accounting separately for new age companies and for so-called old age companies. So just overcome all of these basic, differences, and then approach the subject with an open mind, and don't jump into every company. The only thing is that don't, discount it. Last one more observation I heard that शेल कंपनी है, कंपनी कौन चलाता है, प्रमोटर कौन है, ओवर वैल्यूएशन वी हर्ड. सी प्लीज अंडरस्टैंड वन थिंग विच हैज़ चेंज्ड. व्हेन आई स्टार्टेड माई करियर एंड इन द 90s एंड अर्ली 2000s, इट्स अ फैक्ट दैट व्हेन कंपनीज केम फॉर लिस्टिंग, IPOs, right? IPOs जब आते थे, IPOs have been a bad word for ever and ever, because there have been many instances where the IPO was launched only to collect the money and then nothing happened out of it, correct? But see, please understand, when we were in the 1980s and 1990s, for a promoter, there were only 3 ways to raise money. Either you go to the bank and get bank finance, or you go to friends and family or internal resources, or you go straight with an IPO. Correct? These were the main sources. एक चीज़ आप देखिए कि 2005-2010 के बाद से इंडिया में प्राइवेट इक्विटी वेंचर फंडिंग का कंसेप्ट, सी अमेरिका में प्राइवेट इक्विटी वेंचर फंड, जैसे यहाँ पे हम बोलते हैं सिकोया वॉज प्रॉब्ली अमॉन्ग्स द फर्स्ट. इट्स मोर देन आई थिंक सेटअप इन अर्ली 80s, द फर्स्ट लार्ज स्केल प्रोफेशनल प्राइवेट इक्विटी फंड हाउस, करेक्ट, सेटअप बाय कैपिटल इंटरनेशनल. इंडिया में ये सब 2000 के बाद, मतलब इक्का दुक्का लेट 90s में हुआ होगा, बट द रियल The real track of venture funds, growth funds, late stage, pre-IPO, आप जो भी इसको बोलिए, that has set up in the last 10 to 15 years. Okay? So please understand that the companies which are coming for IPO today, there is one basic difference. Before they come for IPO, they have 15-year published track record with a board of independent directors and with Big 4, Big 5 auditing them for 10, 15 years. Now you can question whether you trust that or not. That is your domain, not mine. Correct? Because you are the experts. But the point is very simple. In 1990s में सब लोग IPO को गैम्बलिंग, सट्टा, चोरी, ये सब चीज़ें बोलते थे, उसके अलग कारण थे. लेकिन अभी का जो माहौल है, इसमें जो IPOs आ रहे हैं, उसका पर्सपेक्टिव डिफरेंट है. बिकॉज एंड इन इंडिया तो कुछ नहीं है. डू यू नो इन अमेरिका, टेक अ वाइल्ड गेस, इन अमेरिका व्हेन अ कंपनी कम्स फॉर IPO, हाउ मेनी years of track record a company has before it comes for IPO? Take a guess. The average age of a company coming for IPO in the US today is 15 years. पहले क्या होता था, वेंचर फंडिंग नाम का चीज़ ही नहीं था. IPO was वेंचर फंडिंग in 90s in India. IPO was वेंचर फंडिंग. If you see today, 15 years ट्रैक रिकॉर्ड के बाद, इंडिया में मे बी नॉट 15 years, मे बी 10 years, मे बी 12 years, बट 5, 10, 15 years ट्रैक रिकॉर्ड के बाद कंपनियां IPO में आती है. एंड समबडी हु इज़ ए प्राइवेट इन्वेस्टर, वेंचर इन्वेस्टर, अ ग्रोथ फंड, हुएवर इज कैपिटलाइजिंग और गिविंग कैपिटल टू द कंपनी, building it through the uncertainty for 10, 15 years. When the hypothesis is proven, when the business is established, then they are coming for IPO. So they will demand their pound of flesh. Because in 90s, if 99 out of 100 IPO was flopping, today it might be 50 out of 100, no? So somebody has to pay the premium for that. Correct? Who will pay the premium for that? Everybody here is not a venture equity or a growth capital investor. You are investing in the public market. So if the filtration process has become stronger, then somebody will pay the premium for that, and the public investor will pay the premium for that. If you don't want to pay the premium, you become a venture investor. Correct? So these things you have to really keep in mind. And the last thing I'll tell you, I'm not here to say which promoters are good or not good, but there are many promoters today who are second-time entrepreneurs, or who are professionals, or who are from the industry, or who are technocrats, or their background is different from what it was 30, 40 years back. So I think that the landscape has changed a lot in last 20, 25 years. What IPOs are coming today versus what it was 30 years back is very, very different. And I'm not, like I said earlier also, please keep ears, eyes and mind open. That is the key thing to keep in mind. One other point which I'll tell you, you need to also think that this is part of India's evolution, right? And I'll tell you why I'm saying part of India's evolution. Have you ever thought, why is it that all these companies, and I'll give you examples of many, many sectors. Say for example, engineering R&D. Say for example, electronic manufacturing. Say diagnostics, hospitals, asset management, wealth management, broking, insurance, apparels, retailing, beauty products, footwear, fintech, consumer tech. 10-15 सेक्टर बोल दिया मैंने आपको. Why is it that all of these were not listed 10-15 years back, and why is it that all of these have come in listing only in the last 5 years? Take a guess. What is the reason? Why is it changed only in last 5 to 7 years? Why not 15-20 years back? Because it is a phase of evolution. If you see 15 years back, India's per capita income was $1,000, right? And 15 years back, 20 years back, when I was part of the industry, we were not getting 17,000 crores in SIPs. We didn't have like crores and crores of there was no CDSL giving press release of 10 crore demat accounts and all. Correct? हम लोग तो, मेरे तो 25 साल हो गए इंडस्ट्री में, हम यही बोल रहे थे कि पेनिट्रेशन कम है. 25 साल निकल गए, हम लोग यही बोल रहे थे कि इंडस्ट्री का पेनिट्रेशन कम है. Why is it changing only now? It is changing only now because it takes a generation for the next generation to come, right? 15-20 years back, bulk of people in India were kids. Our population construct 15-20 years back was exactly like this. We had few people who were old. We had slightly more people who were of a working age, but maximum number of people were actually kids. Correct? And if you ask me, like, very famous investor like Warren Buffett, whenever he's asked that, what's the secret of your success? You know what he says? He says, I won the ovarian lottery, and he gives some complicated biological reasoning for it. But in simple terms, he's saying that he became Warren Buffett because he was born in America in 1930. Basically, he's saying he was in the right place at the right time. And I can tell you with complete confidence that if you're investing in India's markets in 2020s, 30s and 40s, you are in the right place at the right time. But you will obviously notice that everybody who was born in America in 1930 didn't become Warren Buffett, right? So being in the right place at the right time is not purely about luck. You have to do some right things. So next few years we have a platform, and in that we have to do the right things. And being open-minded about investing is the most important thing that we can actually do for ourselves, right? So these are few things I wanted to share, and quickly I have some slides to share with you, so I'll run through that. So some of this I've already verbally told you. It's a very busy slide, but you just have to look at this. See, basically what it shows is that after 2015, right? After 2015, in China, the working age population has been sliding. It has been sliding irreversibly, correct? And if you see Europe, working age population is on a decline. If you see America, working age population is on a decline, but it will stabilize in 10-15 years. That is because of your kids and grandkids. That's why it will stabilize. But the only country for whom the working age population is steadily rising is India. Now see, when I was a kid, I will not tell which year I am talking about, but when I was a kid, it was always said that China has one-child policy. And we were always told that India is, population is such a big problem, right? देखो चाइना में one-child policy है. और मुझे बहुत बुरा लगता था because मेरे घर में मैं दूसरा था. तो हमारे यहाँ पे फिर आया ना कि हम दो हमारे दोस्त हैं. Then I felt that okay, I have some place to be, correct? So, but now it is backfiring in a big way. See, it's like this. I'll ask you a very, very difficult question. एक इंसान पैदा करने के लिए मिनिमम कितने इंसान चाहिए? 2 चाहिए. तो आप हर 2 को एक का ही कोटा दोगे तो 30, 40, 50, 60 साल में पॉपुलेशन का क्या हाल होएगा बताइए? Your population will start narrowing, no? Because every 2 people will give birth to 1 and not allowed anymore, right? So your population will start narrowing. So this is why you can see this irreversible slide. And can you believe it? They reversed the policy only in 2016, which means it will take them another 30-40 years to even get a handle on it. Correct? Now, generally what we do is, when we want to see the market cap of a company, we typically do EPS multiplied by PE. If you forget a company and you talk about a country, right, the annual output, basically you will do population multiplied by productivity of that population. And the productivity of the population has many things like education and logistics and tax structure and industrial policy and hajar things are there. But the prime important thing in productivity is age, right? जैसे अभी फ्रांस में दंगा फसाद हुआ था, not last year, उसके पहले. That was because they made the retirement age 62 years. Correct? So when people become older, the only thing you can do is like in Japan, it's well known, people don't retire till 75. Correct? Because they need people to keep working to preserve the productivity. In France, it used to be 58 years retirement age. They made it 60 and then they made it 62. तो उसमें होबेना चौलबेना करके दंगा फसाद हो गया, सब बंद कर दिया. So they said that if people are retiring at 58, तो उनको तो आप सब दे रहे हैं, पेंशन, हेल्थ केयर, वो सब दे रहे हैं, तो हम क्यों 62 तक काम करेंगे? हमको भी देना पड़ेगा, हम नहीं काम करेंगे. So those kinds of things. So basically, for the whole world, the biggest problem today is that countries which are the richest countries and countries which contribute most to the economic growth of the world, they all are actually aging. Okay? And we have this advantage that we are still very, very young. After us it is Africa, but Africa is not comparable because it is 50 different countries and their socio-economic background, education, health is nowhere close to us. Correct? So the point is that Apple, Tesla वगैरह को हमारे से suddenly कोई प्यार नहीं हो गया है. Basically, they have to see where is the market and where is the labor, right? Both the things they have to see. And if you see in the last 5 years, whatever our government is doing is basically to enhance productivity of the population. So if you see new education policy, if you see logistics, if you see telecom network, GST, production linked incentive. Anything that you see the government does, all of that is for enhancing the productivity of the population. Because in our country, पहले क्या बोलते थे, तुम पहले इंग्लिश सीखो फिर तुम जो करना है वो कर सकते हो. Now they are saying that भाई अपने लैंग्वेज में तुमको जो बनना है बन जाओ, इंग्लिश बाद में सीखना. That direct impact is to enhance the productivity, right? More people become employable. The other important thing is that for most of the things, see क्या है, ये जो यहाँ पे per capita income का चार्ट शायद नहीं है, but yeah, I can share something simple with you. See, 15 years back in India, the per capita income was $1,000. Now, if your per capita income is $1,000, you know, for just put a rule of thumb that $1,000 per capita income, say $900 was roti kapda makan. See, one of the reasons which is not discussed, one of the reasons, like COVID was a human calamity, but one of the reasons why we did not do that badly in COVID is because our per capita income is very low. See, COVID had a maximum impact on rich countries because rich countries have discretionary spend. In our country, bulk of the spend is roti kapda makan. तो COVID है तो क्या करोगे? रोटी कपड़ा मकान मतलब खाना तो पड़ेगा ना आपको, राइट? सो अगर आपका पर कैपिटा इनकम इतना कम है कि रोटी कपड़ा मकान के सिवाय लोगों के कोई खर्चे ही नहीं है, तो कोविड आपका क्या ही बिगाड़ेगा मतलब. बट सी टेक ए कंट्री लाइक अमेरिका, $65,000 पर कैपिटा इनकम, तो रोटी कपड़ा मकान का कॉस्ट $20-25,000 होएगा. बाकी 30-40 हज़ार डॉलर उनका डिस्क्रेशनरी स्पेंड है, विच इज स्टफ लाइक ट्रैवल, टूरिज्म, कंज्यूमर गुड्स, you know, luxury goods, media consumption, zillion other things, right? So point is like this, 15 years back we were $1,000 per capita income, and let's say roti kapda makan was $100 cost. The way this works is when per capita income goes from 1,000 to 2,000, the cost of roti kapda makan will only go at a rate of inflation, not much faster. So when per capita income rises, discretionary income will rise disproportionately. Discretionary spend will rise disproportionately. And the good news is that we are not the first country to traverse this journey. In the world, there are many countries which have traversed this journey. And the history or the learning from the whole world basically suggests that when a country crosses $5,000 per capita income, then mobility and real estate become big sectors. You should see this chart, like, you know, played these video games like Prince of Persia and all of these video games you played. What happens in these video games? When you play for any length of time, you know, you cross certain levels. You become a better player, the game becomes faster and tougher. But when you cross multiple levels, new weapons and tools open up for you. In an economic scenario, when countries cross certain levels of per capita income, then multiple sectors start to open up. मैंने अभी थोड़े समय पहले आपको 10-15 सब सेक्टर और सेक्टर के एग्जाम्पल दिए थे. वो क्यों पिछले 5-10 साल में ही लिस्ट होने के लायक हुए, उसका कारण ये है. Because 15-20 years back, if bulk of the people could not see कि कल का रोटी कहाँ से आएगा, तो उसका इंश्योरेंस या म्यूचुअल फंड लेने का सवाल ही नहीं आता है ना. Where is the question, right? But when per capita income goes from $1,000 to $2,500, there is a critical mass of people which arises, which can see their tomorrow, which can see their future, and only then they will think of saving or investing or taking, you know, equities or broking or insurance or whatever it is. So this is part of a evolution. तो क्या है कि अगर आपको कोई टीवी में आके बोलता है ना, अरे ये सेक्टर तो बहुत गर्म हो गया, खत्म हो गया है, तो जाके एक बार ये चार्ट देख लेना, राइट? सो जनरली पीपल हु आर टॉकिंग ऑन टीवी आर टॉकिंग, अभी जैसे आज अगर टीवी में कोई बात कर रहा है ना, उसका मैक्सिमम पर्सपेक्टिव कितना है मालूम है? मार्च 2025 के आगे नहीं है. अगर कोई बोलता है ना महंगा है, सस्ता है, वो मार्च 2025 के आगे की बात नहीं कर रहा है, वो अभी का बात कर रहा है. एंड मोस्ट पीपल, और बाय एंड लार्ज मोस्ट ऑफ द पीपल इन दिस रूम और मोस्ट इन्वेस्टर्स, दे अंडर एस्टिमेट देयर टाइम होराइजन ऑफ इन्वेस्टिंग and overestimate their need for liquidity. Never forget this. 99%. Can anybody tell me what is your time horizon for investment? आप कितने साल का इन्वेस्टमेंट का आपका कार्यकाल रहेगा? 2 क्वेश्चन का मेरे को जवाब दीजिए. आपका इन्वेस्टमेंट का कार्यकाल या करियर कितना रहेगा? अच्छा, अपने बारे में मत बोलिए. आई एम 48 years old. आपको क्या लगता है मेरा आगे इन्वेस्टमेंट का कितना जर्नी बाकी है? सर, गोल का तो क्या है, जब तक जिंदा हूं तब तक पैसे की जरूरत पड़ेगी. सो समझो आई एम 48, मेरा आगे कितने साल का इन्वेस्टमेंट करियर बाकी है? टेक अ गेस. मिनिमम 30 to 35 ईयर्स. फर्स्ट ऑफ ऑल तो क्या है कि 60 पे रिटायर होता है, उससे कुछ नहीं होता. यू हैव टू प्लान फॉर 100. एंड बाय द वे, मोस्ट पीपल हु आर 30 ईयर्स ओल्ड राइट नाउ, यू विल लिव मोर देन 90. नहीं, गारंटी है बॉस. आपको पता है 2035 तक किडनी लेबोरेटरी में बनने वाला है. अरे सीरियसली, आई टेल यू, देयर इज अ बुक कॉल्ड द फ्यूचर इज फास्टर देन यू थिंक. इट इज रिटन बाय अ गाय कॉल्ड पीटर डायमंडिस. लुक इट अप. ही इज कोटिंग रियल रिसर्च. आई मेट अ गाय हु इज अ इंपोर्टर ऑफ मेडिकल इक्विपमेंट. तो एक किताब पढ़ के मैं बहुत इंप्रेस हो गया. मैंने उसको बोला, पता है आपको ये रोबोटिक्स से सर्जरी हो रहा है? बोलते क्या बकवास कर रहा है. ही हैज सीन अ सर्जरी वेयर द पेशेंट वाज इन अहमदाबाद एंड द डॉक्टर वाज सिटिंग इन न्यूयॉर्क. रोबोटिक सर्जरी. And there is actual research happening right now where kidneys are being grown in laboratories, and by 2035, if your kidney fails, they'll grow it in a laboratory and insert it. So all of you who are 30, ना, आपका investment का journey 60 to 65 years है. Okay, now my second question. समझो कि आज, today you are 50. Example, okay, today you are 50. You started investing and started accumulating money since the time say you are 25. ठीक है. तो 25 से लेके 50 आपने इन्वेस्ट किया, इन्वेस्टमेंट ग्रो हुआ, जो भी हुआ, ठीक है. 25 से लेके 50 तक आपकी जो भी पूंजी है, जो पैसा डाला और ग्रोथ सब मिला के, फर्ज कीजिए वो आप 50 साल के हैं अभी, एग्जाम्पल. तो वो जो पूंजी है वो 100 पे पहुंची है. 100 करोड़, 100 लाख, वो सब में मैं नहीं पढ़ रहा हूं. से इट इज 100. नाउ थिंक केयरफुली, लिसन. आपका आगे जितना भी इन्वेस्टमेंट कार्यकाल है, आप कितना पैसा लगाने वाले हो मार्केट में, और बताइए मेरे को. टेक अ गेस. अभी तक 25 साल की उम्र से लेकर अभी तक जितना आपने लगाया और जो बढ़त हुई, वो कुल मिला के समझो 100 है. अभी आगे के कार्यकाल में आप और कितना, बढ़त वगैरह छोड़ दो, आप और कितना लगाने वाले हो, कितना, मतलब हाउ मच यू विल एंड अप इन्वेस्टिंग. अभी आंसर नहीं होएगा. इट माइट बी 3x, 4x, 5x. इट विल बी अ वेरी बिग नंबर. होता क्या है, बाजार जब गिरता है ना, तो सब लोगों को अभी तक जो लगाया उसकी बहुत चिंता होती है. अरे भाई, आगे तुम्हारा 35-40 साल बाकी है. बाजार गिरता है तो उसमें कितना फायदा होता है वो भी सोचो थोड़ा. किसी का, सी दैट्स व्हाई आई सेड एवरीबडी ओवर एस्टिमेट्स देयर नीड फॉर लिक्विडिटी एंड मनी, एंड एवरीबडी अंडर एस्टिमेट्स देयर टाइम होराइजन ऑफ इन्वेस्टमेंट. सो ऑलवेज रिमेंबर दिस. इन इंडिया आवर जर्नी, अगर आप 25 साल से मार्केट में है ना, तो आपने अभी तक खाली ट्यूशन फीस भरा है. अभी आगे आप देखो क्या होएगा, राइट. सो प्लीज कीप दिस बेसिक्स इन माइंड. एंड व्हाई इज दिस डिजिटल लैंडस्केप एंड ऑल, यू नो व्हाई इट इज चेंजिंग? बिकॉज इंडिया का तो पर कैपिटा इनकम $2,500 है, लेकिन आप लोग जहां पे बैठे हैं ना, उसका $6,000 है. दिल्ली इज द रिचेस्ट, दिल्ली एंड चंडीगढ़. So Delhi and Chandigarh is already like Brazil or South Africa. See, India is India, but if you are in Delhi, Chandigarh, Sikkim is an outlier. सिक्किम में खाली 15-20 लाख लोग हैं और वो टैक्स वैक्स नहीं है, गवर्नमेंट, तो उसको साइड पे रखते हैं. बट सी, गोवा, दिल्ली, चंडीगढ़, यू आर लाइक वन ऑफ द मिडिल क्लास कंट्रीज. मतलब मिडिल क्लास ऑन एवरेज. डोंट गेट ऑफेंडेड. आई नो पीपल हियर आर वेरी रिच. देन यू सी इंडोनेशिया एंड फिलीपींस, राइट. सो तेलंगाना, कर्नाटका, तमिलनाडु, महाराष्ट्र, वेस्ट बंगाल के आगे नहीं है क्योंकि वो सब हमारा एवरेज नीचे करता है, तो उसका चार्ट नहीं बनाया है. ये दिस इज जस्ट अराउंड एवरेज. 2000 भी बिलो एवरेज है. पंजाब इज एट द एवरेज ऑफ द कंट्री. सो द वे टू सी दिस, यू नो, द वे टू सी दिस इज 2 things. You should always see, the way to see how the country is doing is to watch television very, very carefully and look at the advertisements. ओके. सो $1,000 पर कैपिटा इनकम का $2,500 पर कैपिटा इनकम हुआ ना, तो ये डिजिटल लैंडस्केप, कंज्यूमर गुड्स, ये सब कितना चेंज हुआ आपको पता चलेगा. देखिए, डज एनीबडी रिमेंबर, जैसे डाबर है, कोलगेट है, टूथपेस्ट, डेंटल प्रोडक्ट्स, 20 साल पहले इनके एडवर्टाइजमेंट में क्या आता था बताइए? टीवी पे अगर आप ऐड दिखते थे इनका, ऐसे नहीं सर, प्रॉपरली बोलने का, क्या आता था ऐड में? अरे राजू, तुम्हारे दांत तो मोती जैसे चमक रहे हैं. फिर वो क्या बोलता है, क्यों ना हो मास्टर जी, मैं डाबर का दंत मंजन इस्तेमाल करता हूँ. तो वही आपने बोला ना, वो कोयला यूज़ करता था, उसको बोलते दंत मंजन यूज़ करो. अभी 20 साल निकल गया, 25 साल निकल गया, अभी की ऐड में क्या आता है बताइए? आपके टूथपेस्ट में नमक है कि नहीं, कोयला है कि नहीं, कूलिंग क्रिस्टल है कि नहीं, सुबह को ब्रश किया काफ़ी नहीं है, शाम को अगर आइसक्रीम खाया तो फिर से ब्रश करो, गर्लफ्रेंड को मिलने जा रहा है तो ये वाला टूथपेस्ट यूज़ करो, दांतों में पेन है तो ये वाला यूज़ करो. See, they have to segment the market. What it means is that penetration is complete. Now they have to premiumize. Correct? So, this is the reason why all this is happening. See, क्या है, physical का ना limit है. Physical distribution और physical landscape का भारी limit है. That is the reason why, and see, all of this has to be seen along with three things. All of this thing has to be seen with penetration of banking. All of this has to be seen with penetration of telecommunications. And all of this has to be seen with the penetration of payment systems and Aadhaar and all these things. Correct? Because, और by the way, I'll tell you, ये सारी की सारी चीज़ें है ना, प्रोडक्ट्स को या कंज्यूमर को बहुत ज़्यादा चेंज नहीं करती है, सारी की सारी चीज़ें डिस्ट्रीब्यूशन चेंज करती है. They just change how the product reaches. And everything is around that, right? So, see, what is happening is that, अभी क्या होगा देखिए, अभी ऐसे जब मैं आपको बताऊंगा ना, तो you will be, I hope you will be open-minded. When you look at one company and see the share price falling, you feel ये सब बोगस है. वो तो यार आपका काम है ना यार, कौन सा बोगस है नहीं है, वो तो इन्वेस्टर का काम है ना यार. बट टू से ये सब महंगे है, सब लॉस मेकिंग है, सब चोर है, किसी का पैसा नहीं बनेगा, प्राइवेट इक्विटी वाला प्रीमियम में क्यों लिस्ट करा रहा है, अरे भाई तो वो हमारा सगे वाला थोड़ी है यार, उसने 15 साल से चलाया ना कंपनी, अब आपको खरीदना है खरीदो, नहीं खरीदना है मत खरीदो. इट्स लाइक दैट. पॉइंट इज यू हैव टू बी ओपन माइंडेड. नोबडी इज डूइंग एनीबडी अ फेवर. करेक्ट? सो द पॉइंट इज दैट यू हैव टू बी ओपन माइंडेड एंड सी ईच एंड एवरी सब कैटेगरी, right? Like shopping on retailing and shopping on e-commerce, food tech, fintech, health tech, over the top and gaming and entertainment, and ed tech. All of these are changing, and because of them, what is changing is delivery, basically logistics. What is changing is accounting. What is changing is payment systems. तो एक तो ये सारे सब sectors change हो रहे हैं, और इन सबको सपोर्ट करने के लिए पेमेंट सिस्टम्स, कुरियर सिस्टम्स, लॉजिस्टिक्स, ऑल ऑफ दैट हैज टू चेंज, राइट? एंड दिस इज अ वेरी इंपॉर्टेंट डेटा. सी व्हाट इट शोज. इट शोज दैट इन 2023 142 करोड़ पीपल, इसमें से जितने भी नंबर है उसको सबको एनालिस्ट्स का जो भी पिंच ऑफ सॉल्ट देने का देना, लेकिन ये नंबर में मत देना, क्योंकि 142 करोड़ का 150 करोड़ तो पक्का होएगा. करेक्ट? The only one you can be sure of is population 150 होएगा, right? So 150 crores. When population is going from 142 crores to 150 crores, and parallelly what are happening is, say we are 80 crore 4G connections, it will be 111 crore 4G connections. 40% of these, 40% is the digital payment penetration. So 142 crores में से 40%, it will be 75%. See, this has to be seen with age of people also. When age changes, also penetration goes up, because please understand that in any population, kids don't give us anything other than maybe happiness, and they don't consume much. And older people, many older people are entrepreneurs and businessmen, so they contribute, but otherwise generally to the extent that some retire, they don't produce, and they consume also very less. The consumption and production is always determined by the people in the middle, right? So you will have 48 crore OTT users would be 78 crore, 38 crore online transactors would be 75 crore, 22 crore online buyers would be 40 crore, 8 crore ride on demand, online food delivery, उसके 8 crore users है, that would be 15 crores, and ट्रेनिंग, ट्यूटरिंग, आफ्टर स्कूल ट्रेनिंग, ट्यूशंस जो भी है उसके 1.5 करोड़ यूजर्स है, दैट वुड बी मोर लाइक 6 करोड़. सो नाउ जस्ट अंडरस्टैंड वन थिंग. अब आप सोचिए, ये जो आई एम टेकिंग एग्जाम्पल, नॉट अ रिकमेंडेशन, से ये ऑनलाइन फूड डिलीवरी है, इसके 8 करोड़ यूजर है. कितने प्रोवाइडर है इसके? 2. करेक्ट? नाउ यू कैन अंडरस्टैंड व्हाई दे डोंट वांट टू गिव अप ऑन दैट lead that they have, and you can understand why they don't mind postponing their profit. Why they are postponing the profit? Because boss अभी लीडरशिप छोड़ देगा तो ये तो 8 करोड़ का 15 करोड़ यूजर हो जाएगा, फिर क्या करोगे? तो इन लोगों के लिए भी दुविधा है ना कि भाई कब तक इन्वेस्ट करना और कब उसको एनकैश करना है. If they start encashing too soon, and let's say there is a third or a fifth or a fourth or a fifth provider, See, these are monopoly businesses. It's not easy to get into 8 crore, 10 crore people's mobile phones and sit there. When was the last time you deleted one of these apps? Has anybody here deleted Zomato, Amazon, Swiggy, anything on your, have you deleted anything? Sorry? Install nahi kiya. So either your kids or your wife is ordering for you, or your secretary is ordering for you. You are a rich person, you must be having other service providers, but मेरे फोन में भी नहीं था बहुत समय तक, but my wife and my son and everybody, you know. So indirectly I'm a user, and boss, you are paying the bill, so don't even think like that. You are the best person. You're not even using, you're not even complaining, and you're quietly paying for it. Very good. The other important thing is that why is this taking off in such a big way? इसके number of advantages आप देखिए. First is that when you do anything on social, you get reviews and you get validation. There is efficiency, there is affordability, because why is there efficiency? Because you're short on real estate. You're not going to invest in real estate, correct? Labor is anyway cheap in our country. तो ये logistics और couriering करने में, logistics और courier चलाना is much cheaper than opening DLF Emporio या जो भी है उसका दुकान से तो सस्ता ही है. That's why you have these D2C brands, right? Because they are delivered only online, and then the demand goes up, then they start appearing in offline distribution also, right? So affordability, experience, convenience, speed, accessibility, personalization, low friction, right? So it's very simple, right? You walk into one shop here and there will be a salesperson trailing you. How can I help you? इसमें नहीं होता है, correct? So it's a different experience. And there are, like I said just a minute back, you have to see this in light of demographics. Rising per capita income is extremely important. Growing penetration of the telecom network. We have the cheapest data in the world, so it is not going to get reversed. Frictionless payment systems. You know, before this I was seeing the session, you were discussing payment systems. We are actually the best in the world. We are heavily investing in logistics and infrastructure. GST has a good role to play in that. There is a big startup ecosystem and funding available, and there is broad availability of capital, right? So these are things that you should keep in mind as far as consumer tech is concerned. I'll move on to the second part and the last part, which is fintech. Correct. So consumer tech, maybe actually, if you ask me, there are many other, like I put the big trends here, but there are many other trends, which maybe I will circulate the presentation. You can look at it later. Payments, we've already spoken about. Logistics, there are many specialized businesses which are coming into logistics, and companies like Flipkart, Amazon, they themselves are investing very heavily into their own logistics. Correct. I spoke about under-penetration already. So after consumer tech, the second part, which maybe I'll cover in 5-7 minutes, is basically the second part, which is fintech. If you see, fintech is payments, lending, insurance, and savings. Correct. And there again, there is a reason why you have so many players which are coming in. And here also it is about accessibility, comparison, efficiency, ease of transaction, comparison of discovery bolte hain jaise. Right? I mean, it's as simple as that. If you want to open a bank account, you're not going to visit like 4 or 6 banks. Correct? But if you're on a fintech, there is a fabulous, I asked somebody, I think 6 months, 9 months back, I was in an event where there was a 20-year-old. I asked them, beta, where is your bank account? आपको क्या लगता है, क्या बोला होगा मेरे को? नहीं, तो मेरे को कोई ऐप का नाम बोला था. तो मैंने उनको बोला कि नहीं, आपका बैंक अकाउंट कहाँ पे है? तो उनको वो ऐप ही पता है. मतलब भाई, आपका बैंक अकाउंट फेडरल बैंक में है. बोले वो नहीं पता है. तो वैसे तो फेडरल बैंक में नहीं जाते ना पहले. मतलब if there was a federal bank in your neighborhood, no disrespect, we have it in our portfolio, it's doing very well, but no disrespect. But the point is, I wouldn't straight away walk into their branch, right? But I think what Juniper or some app, they open all the accounts in this Equitas and Federal and all, correct? That kid didn't know where is the bank account. Okay, so it's all about discovery, right? And what are the things, जैसे consumer tech का मैंने आपको पूरा wheel दिखाया, what drives the penetration. So if you see in fintech also, efficiency, convenience, experience, speed, accessibility, and simplicity, correct? Because see, it's very simple that people, all of this is being driven, like जैसे WhatsApp है, right? You know that WhatsApp is most used for sending voice notes. The reason is because most people don't want to type in English or type in any language. They don't know how to write and type in any language. Na? So what is the easiest thing? You just send a voice note. You don't need to be literate to send a voice note. You need to be literate to type. Correct? That is why if you see most apps are now start taking voice commands. It's basically to ensure simplicity and penetration. So if you see even in, so we have fintech since last 20 years now, and it is actually growing quite rapidly. पहले it started as verticals, like Paytm was just for payment, but now they are making, see consumer में जो है ना उसमें कोई super app बना नहीं पाया है, but financial में आप देखिए जैसे Paytm, they are trying to make a super app, right? So there are different trends here, but still you can see that its penetration is rising. And where is the maximum penetration? See क्या है, अगर किसी को होम लोन लेना है और उनका अच्छा क्रेडिट है तो वो तो HDFC में जाके होम लोन ले लेगा, उनको मिल भी जाएगा. But where does fintech lending play the biggest role? Where there is urgency, quick money is required, quick borrowing is required, plus it is subpar, it's unsecured personal lending kind of thing. Correct? So that is where the penetration or competitive advantage actually comes in. And the key is that they are lending at very, very high rates. So even if there is failure or even if there is delinquency, they are somewhere probably. This is where RBI has sounded some warnings. So, we don't have any of this in the portfolios and no recommendation, but just explaining to you what is working. And then, of course, you can see even in saving and investment, now so-called discount brokers have got a 79% share. But it's not so much about discount broking really. Maybe they have added to penetration. But even all full-service brokers have fabulous technology. So I don't think that is the key differentiator. I think that the tech space has only resulted in massive penetration, right? After that, those people can go into different ways of dealing with the market. But what it does first of all is to increase the penetration. Correct? So these are a few things I wanted to share with you. 2-3 things last before I end the session. You should also keep in mind that everything, and because you're all, chartered accountants, many of you chartered accountants and investors, should keep in mind that intangible assets are becoming the prime form of, so ये जो traditional accounting में देखते हैं आप, किस तरीके से accounting हो रहा है, क्या expense out हो रहा है या क्या capitalize हो रहा है, you have to see this, that intangible assets are becoming very, very big. Second thing is that firms with loyal customers, loved brands, top talent, innovative products and network effects. अब इसको economically quantify करना बहुत मुश्किल है, but this is what is actually performing very well. And in the traditional accounting framework, see what has Jeff Bezos said way back in 1997, what he says. When forced to choose between optimizing the appearance of our GAAP accounting versus maximizing the present value of future cash flows, we'll take the latter. इसलिए मैं आपको starting में बोला that business का value is present value of future cash flows, not EPS, PAT, EBITDA or whatever that one is actually talking about. So accounting frameworks do tend to sometimes miss out on intangibles. Investment limited to only capex and changes in working capital are missing the boat by grossly underestimating the actual magnitude of the investment. जो मैं पहले बोल रहा था आपको कि 10 करोड़ लोगों के ऐप में बसने के लिए भी इन्वेस्टमेंट करना पड़ता है, right? But how do you treat it? That is the whole question. Correct? So maybe I'll take a pause here, and if I have missed something, so I would just give you some parting thoughts. How should you assess? And this is not just about IPOs. Ignore the IPO bit. Just new age companies. Basic valuation principles will not change. What really matters is cash flow generation. You should focus on positive unit economics. And consumer companies are in the early habit formation stage. So, जो मैंने आपको वो चार्ट बताया, that if the penetration is 8 crore going to 15 crore, then maybe it's still early. And from our perspective, we will always participate in any sector which has heterogeneity. So please understand that fund managers have to not just talk about absolute return, we have to generate alpha. And alpha is a direct function of heterogeneity in a sector. Let me give you a simple example. You take steel. In steel, if you just want to buy steel stocks in your personal portfolio, you may time the steel cycle and you may decide to buy it or do whatever. But for a portfolio manager who has to generate alpha is always a function that you have to do better than the benchmark. अभी benchmark में होता क्या है कि जब अगर आप steel लेते हैं, कोयला लेते हैं, let's say take steel, टाटा स्टील, JSW स्टील, स्टील अथॉरिटी ऑफ इंडिया, मोटा मोटी जब साइकिल आएगा तो कुछ कम कुछ ज़्यादा तीनों चलने की ज़्यादा पॉसिबिलिटीज़ है. HPBP IOC, right? If you take, so what happens is that PSU banks, oil, so what happens is that there are many sectors which are global commodities. They move in tandem. The sector has homogeneity. When a sector has homogeneity, you can time your entry, time your exit, and you can make money. But we have to generate alpha also. So we will always invest in sectors which have heterogeneity rather than homogeneity. And this entire space which I described to you has the highest heterogeneity, which is why it is incumbent upon us to study it. Not that everybody has to invest everywhere, right? So these are the thoughts I wanted to share with you. Thank you for listening me out. I hope it is useful. Wish you all the best.
Thank you, Ashish, for the wonderful deliberation. The house is open for question and answers in case anybody has, questions.
Ashish, I have a question for you. You mentioned about intangible economy. Do you think that accounting profession has not come up to the level where actually the actual facts are? Why I raise this point is look at the issues like Uber. It doesn't have any asset, doesn't have any liability, still has so much valuation. Is it a mismatch between accounting standards and reality? How do you react to that?
Sir, I don't think so. I would not. So I am not qualified to make a broad-based sweeping statement that is it falling short of this thing. My attempt here is just to make people cognizant that ये भी ध्यान में रखना है. And the second thing is that I myself know that accounting for intangibles in your financial statement not easy, easier said than done. And the third thing is that intangible बोलने से it is most subject to distortions and most subject to making fuzzy numbers. So I know the risks also, but here what I've been trying to say is the limited point that when there is no harm in using the traditional policies, but you have to at least keep in mind that it will look very different for the nature of business that some of these guys are actually conducting. Since I am not trained in your profession, I don't think I can give any solution or correct this thing. I can only say that it is something very important to keep in mind. And when we evaluate companies, what we do is we will do DCF and purely on cash flow basis. We will not do anything related to the accounting numbers. We will do purely on free cash flow basis. So that is how we try to overcome this difference.
So any more questions? We have a shortage of time. So one question at the maximum case. Yeah.
Yeah, before in the first session there were deliberation that most of the 75% of schemes are underperforming benchmark. So should one go for the active fund, basically index fund, or one should at all consider this active funds or not? So what is your take on this? Yeah.
So I'll give my take later, but first, let's just have some fun. How many of you in this room, there's say 100 people or so, maybe. How many of you in this room think you are a above average driver? How many of you think you're above average driver? हाथ उठाओ, बताओ यार. बाकी लोगों को ड्राइविंग नहीं आती है कि आप खराब ड्राइवर हो? बोल क्या रहे हो? How many of you think you are a above average father or mother? तो सर मैं ये बोल रहा था कि जब तक दुनिया में 50% से ज्यादा लोगों को लगता है कि दे आर अबव एवरेज, तब तक लोग अल्फा खोजेंगे. Because as long as more than 50% people believe that they are better than average investor, they will be chasing alpha because the index is average and nobody wants to be average. That is basic human nature. It's basic nature, right? Second thing is this. Now second thing I'll come to what you said about the numbers, correct? See, मतलब I have no, आप तो मेरे को जानते हो तो आपको पता है मैंने पैसिव फंड्स भी क्रिएट किए हैं, एक्टिव फंड्स भी क्रिएट किए हैं, तो I will always go by the consumer's interest and I have no favorites, so I can tell with an open mind. See, हमारे यहाँ पे रिपोर्टिंग थोड़ा गड़बड़ है, मैं आपको बताता हूँ क्यों. जैसे अभी लोग क्या बोलते हैं कि इन लास्ट 5 years लॉट ऑफ एक्टिव फंड्स और 60% और एक्टिव फंड्स, ऐसा कुछ आंकड़े आते हैं कि इन लास्ट 5 years लॉट ऑफ एक्टिव फंड्स आर, यू हैव टू गिव मी 5 minutes बिकॉज दिस कैन नॉट बी डन इन शॉर्ट. He asked me a question which I am very passionate about, so I have to answer. So, in last, जैसे बोलते हैं last 5 years, last 3 years, उसमें numbers छुप जाते हैं. क्यों मैं आपको बोलता हूँ? क्योंकि देखिए 2018-19 में हमारा GDP ग्रोथ गिर के हो गया 4.5%, फिर 19-20 में और गिर के हो गया 3.7%, फिर कोविड आया मार्च 2020 में, तो 20-21 में हो गया -7.6%. अब आप सोचिए कि GDP ग्रोथ नैरो होते चले जाना और फिर GDP ग्रोथ बकायदा नेगेटिव हो जाना, इसका क्या मतलब बनता है? दैट मैक्सिमम नंबर ऑफ इकोनॉमिक पार्टिसिपेंट्स आर डीग्रोइंग. यू एग्री? So if economic performance is going to become narrower and narrower, it's obvious that corporate performance will become narrower and narrower. इसीलिए 2019 में वो फ्रेज आया ना कि खाली ऋतिक चलता है. HDFC, रिलायंस, इन्फोसिस, टाटा मोटर्स, ICICI एंड कोटक. ये इसलिए आया था क्योंकि 2018-19 के जो 2 कैलेंडर ईयर को आप मिला लेंगे ना, तो 80% of all small cap stocks gave negative return, 60% of all mid cap stocks gave negative return, half of all large cap stocks gave negative return, but Nifty was up 5%. So what happens is that 2018, 19, 20, in last 5 years, 3 years were very, very bad in terms of economic disasters. If you see 2022, I'll tell you another, मतलब ये मैं excuse नहीं बोल रहा, ऐसा हुआ है वाकई में, और ये क्यों इसके ऊपर ज़्यादा ध्यान नहीं देना चाहिए, आगे जाके चेंज हो जाएगा, फिर ये आंकड़े बदल जाएंगे. See what happened in 2022. In 2022, BSE 500, पूरा market, BSE 500 was up by 5%. But when BSE 500 was up by 5%, small cap index, mid cap index, financials, IT, consumer, pharma, chemical, everything gave negative return. तो आप पूछेंगे कि भाई सब कुछ नेगेटिव रिटर्न दिया तो BSE 500 5% ऊपर क्यों है? Because only if there was an index of Adani stocks, it was up by 70%. The weightage of that industrial group went from 0.6% to 6.5% of the benchmark in 2 years. So Adani as a conglomerate was up 70%, all PSUs were up 30%, and ITC alone was up 35%. So what I'm trying to tell you is that whenever economic performance becomes very narrow, corporate performance and hence market performance become very narrow. अभी इंडस्ट्री का 20-25 लाख करोड़ रुपया लगा हुआ है मार्केट में, तो वो 4-5 स्टॉक में तो नहीं डाल सकते ना 1 साल के लिए, राइट? एंड व्हाट हैपेंस इज दैट इफ यू वांट टू सी हाउ मेनी फंड्स आर आउट परफॉर्मिंग, अब देखिए पिछले 5 में से 3 साल तो इकोनॉमिक डिजास्टर्स थे, ऐसा पिछले 30-40 साल से हर बार ऐसे नहीं होता है, राइट? सो इफ यू हैव 3 out of 5 bad years and then you tell me last 5 years is bad, that's not the way to see. You see discrete periods. 2011, how many outperformed? 2012, how many outperformed? 2013, how many outperformed? If you see discrete periods, then you will be able to figure the real thing. If you keep saying CAGR of last 5 years, CAGR is a very misleading number. One bad year will bring down the previous 5 years and one good year will pull up the, अभी अगला 2 साल अच्छा आएगा तो सब बोलेंगे यार ये कौन सा डेटा बता रहा था अंडर परफॉर्म कर रहे तो दिख ही नहीं रहा है. It will just change. And last thing I'll tell you is that lot of this information people get from America. Because बोलते कि बस अमेरिका में तो अल्फा है ही नहीं तो हमारे यहाँ पे भी eventually ऐसे हो जाएगा. That eventually is quite some time. I'll tell you the simple reason. अमेरिका में पिछले 25 साल में 95-96 से लेके 2021 उसका डेटा है. In 25 years, market cap in the US equity market has gone from 13 trillion to today 45 trillion. अब मैं आपको एक क्वेश्चन पूछता हूं, अगर मार्केट कैप 3 से 4 गुना बढ़ता है तो नंबर ऑफ लिस्टेड कंपनीज क्या होनी चाहिए? बढ़नी चाहिए, घटनी चाहिए, क्या होना चाहिए? बढ़नी चाहिए ना. इट हैज बिकम हाफ. सो इफ यू आर अ मैनेजर ऑफ लिस्टेड इक्विटीज इन अमेरिका फॉर एग्जाम्पल, व्हाट इज हैपनिंग टू योर लैंडस्केप? जितनी कंपनियां हैं वो मेगा कैप होती चली जा रही है और जितनी कंपनीज हैं लिस्टेड उसमें स्मॉल कैप और मिड कैप. So where are those companies going? In America in last 25 years, the corpus of buyout funds has gone from 0 to $2 trillion. Biggest example is Dell. Dell was a listed company. It was bought up for 54 billion and delisted. So companies, so in America, the alpha is going into the private market. It is going out of the listed market and they are the mecca of marketing. सी जैसे मैं आपको एग्जांपल देता हूँ. सो मुकेश सर, पहले मैं समझो आपको आके कोको कोला देता था, बहुत साल तक आपने कोको कोला पिया, फिर पता नहीं मेरे दिमाग में क्या आ गया, मैं आपको बोलता हूँ कि एक काम करते हैं, मुकेश सर तो इंस्टीट्यूशनल इन्वेस्टर है, बड़े आदमी है, और बाहर बहुत सारे रिटेल लोग भी हैं, तो मैं सारे के सारे रिटेल लोगों को जाके बोलूँ, देखो भाई ऐसा है, ये कोक तुम्हारे लिए अच्छा नहीं है, तुमको तो खाली पानी और सोडा ही पीना चाहिए. और मैं आपको बोलूँ, मुकेश सर आपको क्यों कोको कोला लेने का है, मैं आपको कॉन्सेंट्रेट देता हूँ ना अलग से, फिर आप जैसे चाहिए उसको, जैसे मर्जी आप यूज़ करो उसको. सो व्हाट इज हैपनिंग इन अमेरिका इन लास्ट 30 years? The institutions, family offices and the rich people are being told, you should invest in private market. 60-70% of institutional money is going into private market, into alternates. And what is being told to आम आदमी? अरे अल्फा तो आने नहीं वाला है, तुम एक काम करो, इंडेक्स खरीदो. अरे भाई तुमने उसमें से जो टोटल रिटर्न होता है उसमें बीटा प्लस अल्फा होता है. द अल्फा इज द कॉन्सेंट्रेट, द बीटा इज द सोडा. तो तुम आम जनता को बीटा बेच रहे हो और रईस आदमी को बोल रहे हो सर आप कॉन्सेंट्रेट ले लो ना, फिर आपको जो करना है करो उसका, आप अल्फा अलग से ले लो. सो व्हेन उबर गेट्स लिस्टेड एट $75 billion मार्केट कैप, हु गेट्स द अल्फा? The public investors lose and the private investor get they capture all the alpha. That doesn't mean there is no alpha. It has just been divided and sold separately. We are nowhere there. Okay? Thank you very much.
Thank you, sir. Thank you.
आप लास्ट चीज खाली सोचिए, अमेरिका में जो सबसे बड़ा अभी आईपीओ आने वाला है दैट इज SpaceX, $150 billion. इंडिया किधर है आप सोचो? सेव भुजिया वाले का आईपीओ आ रहा है अभी इधर. लॉन्ग टाइम.
Thank you, sir. I would like to invite Mr. Vishnu Agarwal to present a memento to Ashish. Mr. Shailendra Mohan ji to present a memento to Shruti Agarwal ji. I would request Mr. Kashish Gupta to give the vote of thanks.
So I would just say that a person who is showing us a path to become wealthy and who is guiding us to invest our money at a right point of time in the right place, no, any person will fall short of word to thank them. So I would just request the audience to give a huge round of applause for our speakers for the day. And just as a motivational remarks, I have done some calculation. I will just put it forth before my young and wealthy professionals, because I truly believe all the young professionals here are truly wealthy professionals. For the reason that today, if someone qualifies, he can easily get a package of 12 lakh per annum. Let us take this situation and let us assume his age is 25 years. Because this is a very practical, at a 25-year age, we can find n number of young professionals who are getting a package of 12 lakhs. So if they start investing their 50% of salary in their mutual fund schemes or index funds, and let us see they get a return of 15%. So if you calculate after 5 years down the line, at the age of 30, your value would be somewhere between 47 lakhs to 50 lakhs. So what I mean to say, whatever you have earned in the 5 years, you will be getting the same value in your market. And at the end of 5 years, what Ashish sir has guided us, because I was thinking if I start investing today and at the age of 50 I will retire. But he posed a question before the audience that what you will do at the age of 50 if you have been investing since the 25 years. So your mind will keep opening up, you will get learnings, you will get learning curve, and at the end of the day you will think to invest more and more and more. So what my take for today for the young and wealthy professionals is that they should start investing immediately at the age of 25, and at the age of 30 you will see you are a very confident person, very prudent, having a very prudent approach towards investing more in the market, and can make your lives better also. So with this, I again thank my speakers for the day and wish you luck for the coming sessions.
Thank you, Ashish. Astha, over to you.
Thank you to Ashish ji for such an exhilarating session 2, and to Manu ji for moderating the session so well. We will quickly move on to the third session of the day on opportunities provided for wealth creation by owning stocks of banks, NBFCs and other financials. We will be covering subtopics such as growth prospects of banking and other financial businesses in the next 2 decades, how to separate the men from boys, large versus smaller banks, what to look for in a health insurance company before investing, what to look for in a general insurance company before investing, fintechs versus traditional businesses, whom to select. For session 3, I shall be inviting the chairman of the session, CA Anil Sharma ji, to join us on the dais. The keynote speaker for session 3 is a young and dynamic professional, Tej Shaji. Welcome, sir. Please welcome Jonathan Dais. This session shall be moderated by CA Sumit Bansalji. And I would like to invite Vibhor Jain ji for giving vote of thanks. Please join us on the dais. I would like to invite CA Vibhor Jain, CA Sumit Bansalji to give a brief introduction of the chairman and the keynote speaker.
Distinguished guests, we have a very esteemed panel today for the next session, which is on the financial markets. And I'm sure that it will be a very engrossing session given that majority of the participants are from the financial background. But before that, I'll just take a minute. There was a question by our president, what is the nature of the capital markets? So I have some experience about it. It is like a flowing river. So if you find a way, you can easily drink water for free, lifelong, like your dividends. And if you can learn to swim and catch fish, then you can also eat freely lifelong, which is your capital gains. And occasionally a duck which lays golden eggs appears on the horizon. But the catch is that you have to swim against the tide to get hold of it. And that duck is very shy, so you have to keep it and don't stare at it, so it becomes a multi-bagger. But hold on, there are sometimes floods also in this catchment area, which have the potential to take away the gains as well as your investments back. So you need to be conscious about it. और एक बात चल रही थी इंडिया की और एक्सपर्ट्स की, तो जो ये शेयर मार्केट है वो इतना बड़ा टीचर है और इतना बड़ा इसका होराइजन है कि जो हमारे यहाँ जो भीष्म पितामह कहे जाते हैं मिस्टर वॉरेन बफे, और मिस्टर वॉरेन बफे को बनाया चार्ली मुंगर ने, जो कहते हैं ही जस्ट पास्ड अवे एट द एज ऑफ 99. सो उन्होंने 2017 में ये कहा था कि द इंडियंस आर नियरली एज स्मार्ट एज द चाइनीज बट देयर सिस्टम जस्ट डज नॉट वर्क. एंड ही वॉज अ लार्ज इन्वेस्टर इन चाइनीज मार्केट एंड ही डिडंट इन्वेस्ट मच इन इंडियन मार्केट. But guess what, 2017 में we were grappling with demonetization, we were implementing GST, we just came with IBC, वो सब चल रहा था. एंड चाइना में 2011 से 2017 में 4 times हुआ था इंडेक्स उनका, वो बैकग्राउंड था. और 2017 के बाद हम लोगों ने अपने आप को स्टेबलाइज कर लिया. एंड टुडे वी आर डूइंग दिस सेमिनार वेयर लास्ट 6 months में हम 2x और 3x हुए हमारे मिड कैप स्मॉल कैप. और चाइनीज बिकेम कॉम्प्लासेंट एंड ओवर कॉन्फिडेंट एंड दे स्टार्टेड ट्रबलिंग देयर इन्वेस्टर्स एंड देयर नेबर्स. तो वो 2017 से लेके 2023 तक 0% रिटर्न पे हैं. सो विद दीज वर्ड्स हमारे आज के सेशन चेयरमैन हैं श्री अनिल शर्मा जी. सो ही इज़ अ विजनरी हिमसेल्फ, ही इज़ अ लीडर, ही इज़ अ ट्रबल शूटर एंड लीगल एक्यूमेन है. सर हैज़ बीन अ मेंबर ऑफ द नफरा. He is of course the one of the founding members and executive board member of BVSS. बहुत सारी गवर्नमेंट ऑर्गेनाइजेशंस में ICI की कमिटीज़ में सर मेंबर हैं. So with these words I request all of you to give a round of clap for sir and I request sir to give his opening remarks. Over to you sir.
So very good afternoon to all of you and thank you Sumit. And let me first invite my fellow speaker, Mr. Tej Shah, who is going to take us through wealth creation by owning stocks of banks, NBFCs, and other financial institutions. So I would just like to give you a few glimpses of how this sector, what is this sector is all about, and what is the size of this sector, and then technicalities, the other aspects of investing into that. I'll leave it to him to see dwell upon. See, as you all know, that financial sector is seen to be a backbone of our Indian economic growth. And definitely we have a very well diversified financial services sector with us. So when we say financial services sector, we are talking about mutual funds, insurance companies, commercial banks, non-banking financial companies, pension funds, and cooperatives, and so on. Over a period, we can see that financial service sector in India has experienced a rapid growth, and which accounting for close to 6% of our country's GDP. It's a very substantial figure. The sector's growth has been driven by factors like very favorable government policies, innovative products. We have seen about, in earlier session we talked about fintech, and all this has also contributed a lot into this banking, into this financial service sector also. And higher focus on under-penetrated business areas, which I will just dwell upon a little later. So companies in this sector are focusing on widening their outreach through emerging technologies with an end objective of sharply reducing the cost of operation. So which is actually, once they reduce their cost of operation, their profitability increases, and that is reflected in their valuations at a later stage. Until very recently, India has been as a financial services sector which was dominantly by the government sector only. So all nationalized banks were providing most of these services. So, and then we have seen NPAs, how NPAs happen. Then government came out with the introduction of IBC, which has really helped see this entire political sector to. So government has not only recapitalized the banking sector, and IBC has helped these banks to recover a lot of money which they have lost. And in fact, if you look at the data, so around 2.5 lakh crores was recovered against 8.3 lakh crores which was admitted claim by the banking through IBC. Almost 2,500 NPA cases were closed in last 7 years. It's again you must have noticed the recent Supreme Court judgment where they have said that even personal guarantees now can be used for in the bankruptcy proceedings, which is again going to increase the recovery by almost 5% more. So this is again a very significant judgment, and banking sector will see NPA level going down in more. So that is a good development there. Fintech companies are aggressively using technology to offer financial services such as personal loan, insurance, mutual fund, and again in our earlier presentation we have seen how these fintech companies have really revolutionized the whole sector there. So when we talk about the banking stocks principally, so they are considered to be heavyweights, and they have major contributor to the Nifty and Sensex index. They form an important part of India's economy, are a prominent player among financial services firms. India is supposed to be considered as still a very saving-oriented economy, and banks play a major role in the country's financial growth. Huge deposit growth coupled with the rising credit demand has pushed stock in this sector to furnish record returns for investors. So many of the Indian leading banks are among the largest corporations listed on NSE and BSE by market capitalization, demonstrating their importance to the economy. I mean, if I just take few names, HDFC has got a market capitalization of more than 9 lakh crores, which is the largest private sector bank. Similarly, ICICI also commands roughly 6 lakhs crores market cap, making it one of the largest private sector bank. Then SBI has a market cap of roughly around 5 lakh crores, making it one of the largest bank in India, and which is largest PSU bank in the India. So, similarly, when you look at some of the NBFCs stocks, you can there see companies like Bajaj Finance Limited, which has got a market cap of more than 4.5 crores, 4,50,000 crores. Cholamandalam Investment, Bajaj Holding, Shriram Finance, Muthoot Finance, Indian Railway Finance Corporation. These are some other non-banking financial companies who have got somewhere around 1 lakh crores of market cap. So you can see that banks and non-banking financial companies are contributing a lot into the valuation of Nifty as well as in both stock exchanges. The size also indicates that there are certain risks and challenges in this financial services sector also. And one of the most, I would say, important or most important challenge or risk is the cyber security. Because most of the activities these days in banks and NBFCs are happening through digital mode. So these banks are subject to cyber attacks, and they have to heavily invest into this area to save them from cyber security. Then second risk area, or I would say the challenge for this particular sector is that this is the most regulated area. Reserve Bank of India is regulating them, and ever-changing complex regulatory environment is there for them, and which makes them sometime we have seen banks failing. Of course, there are some banks which are difficult to fail, but in some smaller companies, NBFCs and all that, we have seen some those failures only because of regulatory compliances. And then market volatility is another area which has to be seen as a risk or challenge for financial services sector. Liquidity risk is also another point which can be seen here. But one important point which has helped this sector to grow is the government policy. When I mentioned that the government policies, favorable government policies has really helped, and one such example is the Pradhan Mantri Jan Dhan Yojana, which has really come out. If you look at this JAM Trinity, which we call it Jan Dhan, Aadhaar and mobile together, where all the government schemes, direct benefit transfers has created almost like 51 crore accounts as on date has been opened in this last 8 years. And in those accounts, around 2,08,000 crore balance in the beneficiaries' accounts is still sitting in those accounts, which is helping the banks to use this as a CASA, which we call it current account and saving account balances, which is like a very good source for them of a cheap finances available to them, and which has helped them to show their performance in this particular sector. So I think this is the background which I would like to, I thought I would place, and we have Mr. Tej Shah with us, who is representing Marcellus, a very big player in the market. They are almost managing a AUM of around I think 10,000 crores, and more than 8,000 investors are there. And I would expect him to give us that why this banking and financial service sector is a good area where we should be investing for wealth creation. So thank you very much.
Thank you, sir, for your very enlightening thoughts on this topic. Before I call our keynote speaker, Mr. Tej Shah, I was just going through his profile, and what really impressed me was that he has had experience in a venture capital fund, in a merchant banking firm, and now he is, of course, in a very respected PMS firm, Marcellus Capital, and he is himself managing 600 crores of AUM in the banking space. और एक जो मुझे लगा कि वो सिर्फ चार्टर्ड अकाउंटेंट नहीं है बल्कि गुजराती चार्टर्ड अकाउंटेंट हैं. So really looking forward to his words of wisdom on the topic, Mr. Tej.
Thank you for that, and it's a pleasure being here. It's a privilege being here, and thank you for inviting me and having me here. I've realized that I have the difficult task of delivering a session after Ashish's engaging session and just before lunch. So tough job at hand, but I'll try my best. I'll try and keep it as open-ended as possible. I'll go through whatever slides I have just for 20 minutes and keep most of the time for Q&A because this is a topic which is quite wide. I might have something else in mind when I present these slides. You might have something else in mind as your questions. So I first wanted to cover why are we discussing equities? Why are we discussing even investing in equities? This is the data of the last 30 years in India. If you were to look at gold over this time period, gold has delivered 9% compounded return, which is 1990 to 2022. If you were to look at the Indian stock market, it has delivered 13.5% compounded over the same time period. And obviously, if you were to look at fixed deposits, that's 7.5%. This is during a time when you can say inflation was at about 6%. So, first of all, investing in equities, if someone would have invested in equities 30 years ago in India, 13.5% compounded versus any other asset class, significantly lower. That is why, first of all, I think it is important to understand that equity is an asset class which over a long time period, and I stress on that, you should have an extremely long time horizon. If you have that, this is the asset class which will beat inflation hands down. So that's point number one. The second point is, over 30 years, what is the value of 100 rupees invested? You know, percentages look really small. क्या फर्क पड़ता है 8% दिया या 11% दिया? It's a 3% differential. But over a 30-year period, 100 rupees invested in gold will become 1300 rupees. The same 100 rupees invested in even Nifty 50, which was the question, right? Even if index में invest करेंगे, even that should be fine. The same 100 rupees would be 3000 rupees. So 30x over 30 years versus 13x in 30 years is a large differential. Gold versus just Nifty 50 index. If you invest in a well-managed equity fund which delivers 15-16%, then that is a altogether different story. वो आपको 85x भी दे सकता है. Now, coming to why we are so fortunate be living in India in this day and age where we are going through a transformational change. Even over the last 10 years, 20 years, 30 years, India has been the best performing stock market in the world. So, investing in equities, even within equities, we are investing in Indian equities. It's been the best performing stock market comparable to the US stock market over the last 30 years. You could say why, look at history, maybe the next 10, 20, 30 years are not as good as the last 30 years. But given where we are headed, given what our future looks like, given what our relative demographics look like, whether it is average age of population, whether it is average per capita income, whether it is GDP growth, whether it is inflation, all of that combined, it looks like the next 10, 20, 30 years, Indian numbers will be on a relative basis maybe even better than what we are looking at, which is the US over the last 30 years has delivered about 13.5%, we have delivered about 13%. The next 30 years, if we deliver something similar, 100 rupees will become about 40x over 30 years. And like we discussed in the previous session, all of us on average do have a 30-year investing horizon. And therefore equities. That is why it is important to understand that equity as an asset class especially Indian equities, is a very powerful asset class, delivering 13% to 14% over extremely long periods of time. The second thing is, over the last 30 years, this 13-14% return has been a bit more volatile than I think what the next 30 years will be like. So 1990 to 2000, we saw multiple ups and downs. There was a large stock market scam that everyone is aware of. There was a huge euphoria in the post-liberalization era. Then 2000 to 2007 again can be divided into two parts. 2000 to 2003, the markets did not go anywhere. And then between 2003 to 2007, the markets skyrocketed. Then 2008 to 13 again, markets did not go anywhere. So over the last 30 years, while there have been lots of ups and downs, I think the next 10, 20 and 30 years, the quality of growth, the predictability of growth and the stability of growth will be much better. We will not be in for a ride which is as volatile as we have seen over the last 30 years, because the fundamentals of our economy have changed for the better. Our economy has become much more predictable. Our macro stability has become much more predictable than what it was in 2000 or 2010 or 2015. Hopefully in the next 10-15 years, we will not see banks fail. We will not see things like demonetization happen every few years. We will not see GST or laws like GST become disruptive like it was for the first couple of years. We are now going to reap benefits of whatever we have done over the last 10 years. Now coming to the specific topic of financialization. In this context of equity markets, India has one of the highest household savings in the world, which is at 17%. China is the only one at 36%, but as Indians, our mentality and psychology is to first save, because we've come from an economic background where roti kapda makan was the first preference, and then people used to save, because kabhi bhi kuch bhi ho sakta tha. People always believed in the mentality of saving first or passing on wealth for the next generation, and then if there is money left, they would spend on some travel, some luxury items, something else. So we have one of the largest savings in the world at 17%. Now these savings are invested largely in real estate and gold. We have also one of the largest physical savings in the world. So one of the RBI reports actually went on to claim that 95% of India's household savings are in real estate and gold, and only 5% are in financial savings. So 5% financial savings means stock markets, fixed deposits, life insurance, mutual funds, so on and so forth. If you are to go to the US, about 95% is actually in financial savings and only 5% is in real estate. So our ratio is quite the opposite. We are at 95% in physical savings, only 5% in financial savings. Therefore, if we were to look at the evolution of financial services in the US के stock market में from 1990 to 2006, 2007 till the global financial crisis happened, which is the chart on the left, about 20 to 25% of the stock market, which is S&P 500, comprised of financial services companies. The largest part of which used to be banks, insurance companies, and some payment companies like Visa and MasterCard. Post 2007, post the global financial crisis as we speak today, that number has come down to only 12-13% of the market. So only 12-13% of the US market today is financial services. On the other hand, I think we are going to be much more similar to the UK. If you were to look at the UK stock market is today about 15 to 20% in financial services. Of that 15 to 20%, over a longer period of time, the contribution of banks has come down. Banks used to be 80% of financial services in the UK, which has now come down to about 50%. A larger and larger part of it has become insurance, payment providers, non-lending private equity players, non-lending banks, like say for example you have Bajaj Finance in India. And if you were to therefore look at evolution of financial services in India, this is how it looks. It's gone only one way. In 2001, only 10% of BSE 500 used to be financial services companies. Today, that's almost close to 25 to 30%. Even within that, there are new segments which are coming up, which is, if you look at the top half, which is the yellow chart which has just come up, which is insurance. So insurance is something which has become listed, all insurance companies have become listed only in the last 5 years. So PSU banks, which used to be the largest part of financial services, their contribution is gradually falling. Private banks is increasing or remaining where it is. Diversified financial services, which is mutual funds, which is NBFCs like Cholamandalam, Bajaj Finance, Shriram Group, their contribution is increasing, and gradually we are seeing the contribution of insurance coming up. Insurance companies globally have large contribution in listed space. We are over the past 5 years in India starting to see that. So what is happening within each of these sectors? We spoke about, say, banks. Within the banking space, private banks loan book used to be 25% of the sector. Now that over the last 15 years has gone up to about 45%. Their market share has doubled. Similarly on the deposit sides, 20% market share for private banks has gone on to become 40% in the last 15 years. So what we are seeing is 3 things. One is, first of all, our market is delivering about 12-13% growth on a long-term basis. On top of that, financial services contribution is increasing. Contribution of financial services went down from 10% to 25% of the listed market. On top of that, within that, private sector banks, market share is increasing, has doubled from 20% to 40%. So 3 layers of growth. Our market itself growing at 12-13%. On top of that, financial services growing at a higher pace. On top of that, private sector financial services growing at an even higher rate because their market share is doubling. Similar is the case with life insurance and general insurance companies as well. Life insurance, there is only one public insurance company, which is LIC. Their market share is falling. Over time, we have seen private insurance, life insurance market share going from 10% to 60%, a 6x increase. General insurance going from 20% to 60%. Their market share has tripled over the past 15 years. So what we are seeing in banking and what we have seen in banking, the same thing is being repeated in life insurance and general insurance as well. That is private sector gaining market share from the public sector. So in this backdrop of private companies gaining market share from public companies, the question then becomes, how do we then invest, analyze and make money by investing in banks, NBFCs and insurance companies. So the first thing to be very mindful of is that all of us become really excited and enthusiastic when the markets are going one way, which is like the last 1 year, and we become really sad, we get depressed when the markets correct, which was some part of the previous year, say around the Ukraine-Russia war. Financial services and investing in banks, NBFCs is actually a version which is leveraged version of the markets, which is if markets fall 10%, they will fall 20%. If markets go up 10%, they will go up 20%. And this is what we have seen over the past 20 years and we'll continue to see this over the next 20 years, which is financial services go through a period of boom and then a period of crisis, then again a period of recovery and then again a period of boom. And we'll keep seeing that. So it is important that we remain calm through all of these time periods and keep in mind that as long as we stay invested, as people say, time in the markets is more important than timing the markets. As long as we stay invested, we'll get the minimum 13 to 14% returns that the market gives over a long period of time. If we invest in better companies which are gaining market share, we can get anywhere between 15 to 20% as well. So that's the first rule. The second thing is the process that we follow is there are about 100 companies within the financial services space which are credible, which have a decent market cap. We run a forensic filter on these 100 companies. Our forensic filter tells us that out of these 100 companies, which are the companies which have actually not made up their books of accounts. These are companies which are hopefully not the Yes Banks and DHFLs of the future. That is what our forensic screen tries to find out. Out of the remaining 65 stocks, which remain after they pass our forensic filter, we run a capital allocation filter saying, okay, these 65 companies are honest, they are producing the right accounts, they are not hiding their books of accounts, but out of these 65 companies, which are the ones which have historically delivered positive fundamentals, consistency of returns, which are consistently doing profitable business. Then we are left with only about 25 stocks, which remains and is our investment universe. That is where we invest our money. So on the forensic screen, what we try and do is we have about 11 to 12 accounting ratios. These accounting ratios are, for example, fee income as a percentage of net interest income. If fee income as a percentage of net interest income we believe is extremely high, which used to be the case with Yes Bank, they used to have an extremely high number of fee income, then that company ranks poorly on our accounting screen. Another interesting ratio, given that I am in the company of fellow chartered accountants, is auditor remuneration growth as a percentage of sales growth or as a percentage of interest income growth. So if auditor remuneration for any bank or NBFC is growing at a rate which is much higher than the business growth, then it is a red flag for us. Then we try and see what is the reason for that. Again, it ranks poorly on our accounting screen. Basis that, we get three different rankings. So D10 is the worst rank for a company, D1 is the best rank for a company. D10, a company, if it ranks D10 on all of these accounting screens, we simply don't invest in that company. We've called it the zone of thuggery. If a company ranks in D1, D2, D3, that is actually a zone of quality. Those are the sort of companies that we would want to invest in. A HDFC Bank, a Bajaj Finance, a Kotak Bank would usually rank in D1, D2, D3. Now coming to the second screener. Okay, so if you are honest, you've passed our accounting screen, and if you've passed our accounting screen, you have to prove the next step, which is, are you running a business which is profitable, which is consistently growing, and which is consistently gaining market share? The way we try and analyze that is, financial services or lending is quite a complex business. The way we try and analyze that is, if you have 100 rupees of equity, if as shareholders we've given you 100 rupees, how do you lend that money out? If on that 100 rupees, you're first of all going to borrow as an NBFC or a bank from the public, right? On 100 rupees of equity, you will have deposits which you will borrow. Let's say you have 1000 rupees of deposits on top of that. So on 100 rupees of equity, 1000 rupees of deposits, your total amount which you can lend is, say, 1100 rupees. On those 1100 rupees, usually as a bank you will charge, say, 12% rate of interest, you will borrow at 4 or 5%. The remaining money in the middle, 12% minus 5%, say your borrowing rate, 6-7% is your spread that you will make. On that 7% spread, you will have some expenses. Say you would have 100 to 200 rupees of expenses, you will be left with 400 rupees. And then you will have to provide for NPAs, which usually for a good company would be 1% of your total lending. If you are not a good lender, will be much higher. With this math, we try and analyze on the 1100 rupees which you have lent, are you making at least 2 to 3%? If you are making 2 to 3% of that, then you are a good lender. What that will mean is, on 1100 rupees, 2 to 3% would mean about 20 to 30 rupees of profit. On 100 rupees of equity, if you make 20 rupees of profits, that's 20% return on equity. So on a fixed deposit, as investors we make 7%, that is 7 rupees. On this 100 rupees, we will make 20 rupees, and that's actually a great lending business. And that's what HDFC Bank or Bajaj Finance has done for a very, very long period of time. And that's why it's a very virtuous cycle. That on every 100 rupees, you keep making 20 rupees. You again, 100 rupees becomes 120, you lend 120, you again make 20 rupees on top of that. And that is the compounding engine that is HDFC Bank for the last 25 years. For 25 years, they've kept on doing that with 1% NPAs, and therefore they have created about 100x share price returns in the last 20 years. Lastly, one case study. This has been an investee company for Marcellus, which is Bajaj Finance, and we've been holding on to this company for the last 5 years now. We've been through multiple ups and downs for Bajaj Finance when it corrected 70% during COVID, from that 70% correction post-COVID. So we've seen all of that, and the reason that we hold on to this company is obviously it clears all our accounting filters. It's great on governance, owned by the Bajaj Group. Secondly, it also clears our capital allocation filters, which is it makes more than 20% return on equity, gains market share, grows at 25% year on year. Over the last 10 years, it's compounded profits at 40%. 40% compounded growth over 10 years in profitability, 45% compounded growth over the last 10 years in loan book, 30% compounded growth in terms of share price returns versus 13% for the index. That's the sort of wealth that Bajaj Finance has created. Now, how has Bajaj Finance been able to do this? So what Bajaj Finance did 15 years ago, when Rajiv Jain, the current MD and CEO, joined the company, what they did was, they first of all entered the consumer durable financing market, which is when you go to a Croma or a Vijay sales to get a fridge or a TV or a washing machine, the fastest loan that you can get is from a Bajaj Finance. They can give you a loan within 5 minutes versus say HDFC Bank or some other bank which is also present. They'll take about 20 to 30 minutes for you to process that loan. The reason that they've been able to do this is, on 10 crore Indians, they have a database which they've segmented into, let's say, doctors, chartered accountants, lawyers. Even within a doctor, they've segmented even doctors into multiple segments, saying, are you a doctor who is living in Mumbai, Delhi, Ahmedabad, a metro or a tier 1 city, or are you a doctor in a rural area? If you are a doctor in a metro or tier 1 city, are you an oncologist and a specialized doctor, or are you a general practitioner? If you are an oncologist, Bajaj Finance, and you are say practicing in Mumbai, Delhi, Bajaj Finance says great, I know the amount of money that you will be making, I'll give you a loan instantly and I'll charge you much lower than if you are a doctor who is a general practitioner in some tier 3, tier 4 town or city. For him, I'll charge 18%. If you are a specialist in Mumbai or Delhi, I'll charge you only 12%. They have all of this data segmented into, within doctors, 35 different segments. That is why they are able to take decisions within 5 minutes, 3 minutes, sometimes even 2 minutes, because they know exactly how much you are earning without you giving them any income proof. The only two things that they usually ask for is a PAN card or an Aadhaar card and your CIBIL score, which they will be able to fetch instantly. On top of that, maybe some fintech is being able to do that, but on top of that, Bajaj Finance is backed by the Bajaj Group, which has not defaulted in its 100-year history. So Bajaj Finance is also able to borrow at 6% or 7% from banks, while a fintech company will borrow at 12 or 13%. So Bajaj Finance borrows at 6%, lends to people like in this room at 17 or 18%, makes a 12% spread with no NPAs. That is why Bajaj Finance is such a profitable business model. Even if a fintech is able to build something like this, they won't be able to borrow at 12%. Even if, say, HDFC Bank is able to borrow at 5 or 6%, they don't have the technology of a Bajaj Finance. That is why it is such a super compounding engine, which will keep compounding hopefully for us for the next 5 to 10 years at 25 to 30% as well. So I'll stop over here. Happy to take any questions.
तो तेज भाई 95 में HDFC बैंक का IPO आया था, 10 रुपए का शेयर 10 रुपए में, 10 लाख रुपए इन्वेस्ट करे होते तो आज 130 करोड़ रुपए होते. अब वो फर्स्ट CEO वाज मिस्टर आदित्य पुरी, हु वाज कंट्री मैनेजर ऑफ सिटी बैंक. उसके बाद फिर 2 कंट्री मैनेजर्स ने मिलकर येस बैंक शुरू करा, पर वो कंस्ट्रक्ट नहीं चला. सो आपने अभी मेंशन किया कि येस बैंक यू फिगर्ड आउट इज अ नो इन टर्म्स ऑफ इन्वेस्टमेंट. So give us 2-3 ideas as to how do we filter within the banking or the lending space to figure out which to invest. Bajaj Finance, obviously, we now know.
Sure. So I think the first rule while investing in lenders is that every 3 to 5 years, there comes 1 or 2 years where some new bank, some new NBFC will be doing extremely well. Double ho jayega stock price, everyone will be running after that bank, and then inevitably, when the downturn comes, most of these banks or NBFCs will no longer be there, and the usual names will be standing. So one statistic I'll give you. Like you said, right? 1995 में HDFC Bank IPO आया. So 1995 से 2023. That's about 30 years of listed history of HDFC Bank. And despite the fact that 10 lakhs have become 130 crores by just simply holding on to HDFC Bank, in this 30-year listed history, it's not even for 1 year, not a single year, that HDFC Bank was the best performing banking stock in India. Not for 1 year. On the other hand, Indian Overseas Bank, in this 30-year history, 3 times best performing banking stock. Central Bank of India, 2 times best performing banking stock. But 30-year compounded returns for all of these stocks, next to nothing. Last 15 years, 2008 to 2023 has been negative for Central Bank, Indian Overseas Bank. They have now just reached the levels they were in around 2008. So therefore, in this sector, because debt equity ratio is 10x, 15x, sometimes even 20x, if you run after banks or NBFCs which are the latest fad, or which are the ones which have just come up, don't have a great track record, or those companies which are just turning around, usually over a longer time period it ends up to be a bad outcome. So the first thing is to avoid companies which don't have a good track record. The second thing is to avoid companies where you historically known that these companies don't have good underwriting. It's just because macro environment has been good, which has been the case for the last 2 or 3 years. Last 2 or 3 years, there has been no NPA creation. First of all, because 19, 20, 21, most banks stopped lending. COVID में the country was shut, who will you lend to? So if lending ही नहीं किया, NPA कैसे आएगा? So now that in the last 2 years banks have started lending, you will see NPAs start coming up in 2025, 2026. That is when you will see the real differentiation on quality. Now again, touching up on the accounting screen, right? Yes Bank, how did we spot back in 2015 or 2016? First of all, fee income for Yes Bank used to be extremely high versus its peers. So what does high fee income for a bank mean? Yes Bank used to do a lot of developer loans. Yes Bank used to do a lot of large corporate loans. On every 100 rupees of loans which Yes Bank used to give out, they used to charge 4 or 5% as fees. अभी 100 rupees of loan के लिए कौन सा corporate upfront 4 या 5 रुपए देगा? Obviously the ones who are in dire need of money. Reliance will not give 4 rupees of fees on every 100 rupees it borrows. And therefore, for Yes Bank and for that corporate, it was a win-win. The corporate was getting money at whatever rate it was getting money when it was in the need of money. For Yes Bank, उसका P&L बहुत अच्छा दिखता था because fee income you could record on the P&L. Its P&L profitability, all metrics used to look great. Similarly, contingent liabilities as a percentage of net worth. Yes Bank had high amounts of contingent liabilities, and like all of you know, contingent liability is not a balance sheet number. It's a part of the footnotes, but it's not recorded as debt to equity or is not recorded on the balance sheet. So when Kotak used to have 5 times more contingent liability versus its net worth, Yes Bank used to have 24x its net worth as contingent liabilities. That was the amount of exposure that Yes Bank was seeing on its balance sheet. So I think being prudent, staying invested in conservative companies which have done well for long periods of time, and like most people say, the next HDFC Bank is HDFC Bank. You just stay with the compounders for long periods of time rather than finding the next HDFC Bank. That's what worked for us.
Tej, I also have a couple of questions for you. See, first, we have seen that asset liability management within the banks and NBFCs has played an important role. Companies like Sri Infrastructure and Finance, they have failed. So how your accounting filter takes care of, do you have that kind of filter also? And then second point, in lot of banks has got a huge treasury within their framework. So how that reflects to their performance, these two?
Sure. So that's why I put up this ALM, like you said, is a very important part of lending. If you take this quote from the MD of Bajaj Finance, this is what he said back in 2018-2019 when IL&FS crisis had happened. He said we had been showing the asset liability management data for the past 5 years, but no one had been paying much attention to it because the industry was just doing fine. So we pushed this ALM data to the next year of our investor presentations. Now when investors ask for it, this is what Rajiv Jain, the MD of Bajaj Finance says, thank God I did not treat ALM as an annexure to my business model. So that's how important conservative lenders treat asset liability management as. It is something which is qualitative in nature. Of course, there are numbers to it. So while our 11 ratios focus on forensic accounting, once we shortlist the 30 or 25 companies which we think are investable, then we get into the fact of whether they're actually managing their ALM well or not. And usually we have seen that housing finance companies especially are relatively poor at ALM management because housing loans are 10-year, 15-year, 20-year loans. There are very few companies which are able to borrow for 10, 15 or 20 years. And then because they are not able to borrow for 10, 15, 20 years, these housing finance companies usually start taking shortcuts of borrowing from the CP market, commercial papers, borrowing of 1 or 2 years, lending 15, 20 years. And once there is a crisis in the market, they are not able to borrow for 1 or 2 years. That is when things like DHFL or IL&FS typically happen. So yes, it's quite important.
You can take a few questions from the audience.
So this recently this 5 merged banks have become 5 major PSB, public sector banks. State Bank of India, Canara Bank, Union Bank, all these banks merged. And what is the prospect that will become another HDFC or ICICI bank like that? Is there any possibility? Because is there any difference of computation or analysis or reporting or anything like that for PSBs and private banks? Private bank, why private banks are so strong and why PSBs are wrong? Maybe due to NPS. And another thing is this is 5 banks, small banks are going to be merged. Is there any news that Indian Overseas Bank and Central Bank, Bank of India, Bank of Maharashtra, and I think one more bank is there. Is there any possibility that that also will be merged with another bank?
Yeah, so there have been rumors about some of these banks either privatizing or merging. Yes, it might happen. Just from the media reports, it appears that the government wants to do it. Hopefully, maybe in the next 2 to 3 years, it might happen. On why there is such a big difference between private banks and public banks, and why this has happened, right? 25% market share going to 45% in a period of 15 years in such a large industry. I think the largest reason for that is the objectives of PSU banks and the objectives of private banks are very different. PSU bank ownership is with the government. Majority owners' objective, which is the government over here, is obviously, as it should be, the welfare of the nation, the welfare of the public. On the other hand, the objective of owners of private banks is only one, which is earn profits. And they are extremely capitalistic, they will do anything to make money. So on one hand, one type of bank is there to make the nation a better place to live in, to give farmer loans. In some cases, say for example, there are rumors that there will be El Nino this year. In case there is El Nino, there will be some states in India which will see crops not doing well. Those farmers will have NPAs. The right thing to do for these public banks, therefore, might be to waive off those loans or give more loans to those farmers. On the other hand, a private bank will never do that. So these differing objectives of the owners of private banks versus public banks leads to the large differences in outcomes on every metric possible, whether it be technology, return on assets, return on equity, market share, loan growth, NPAs, so on and so forth.
PNPs are also reducing.
Yes, so NPAs are, so NPAs are definitely, like I said, improving. We are sitting at all-time low NPAs, all-time high equity and tier 1 capital. This equity, tier 1 capital and balance sheet state, Indian banks have not seen in their whole history. Of independent India history, this is the first time tier 1 capital of Indian banks is at 16%. They are in their best shape ever. But the proof of the pudding is, will public sector banks be able to gain market share? Will they be able to take away market share from the large private banks? I think that is difficult. They are in significantly better shape than what they were 10 years ago. They will do much better than what they have done between 2010 and 20. But will they be able to gain market share? I think it's difficult.
Tej, I have few questions. So many of us here, they know about HDFC Bank, you have spoken about it. They know about Bajaj Finance. They know about HDFC Life Insurance. Sure. They know about ICICI Lombard Insurance. They know about housing finance companies, erstwhile we had HDFC. But the question is, have they grown too big? Can we expect them in an economy of India? Can we expect them increasing profits 4 times, 5 times, 8 times, 10 times? Because only then meaningful returns can be achieved out of it. So putting it into numbers, if HDFC Bank today has 12 lakh crores of market cap, can it grow 5 times from here? How does numbers support it? And likewise, HDFC Life Insurance, I think, is around 3 lakh crores. Yeah. Can it grow 10 lakh, 15 lakh crores on market cap basis? What are the numbers that can support that? Because we all know that these are safe stocks. They are stocks which are growing continuously, but can they grow that significantly that a person puts his money today into these? This is something which bothers all, if you can put some light into it.
Sure, I think that's a great question. Let's put some numbers to it, right? Like I said, the fortunate part is that we are living in India and we have a large economy, an underpenetrated economy, and within that, in financial services, largely about 60% market share is with the government or government-owned banks. Because 60% market share is still with government-owned banks, there is a large runway for growth on both of these aspects. One is on the market itself growing. Lending industry in India itself grows at about anywhere between 12 to 14%, whichever year you look at, anywhere between 12 to 14%. That's because nominal GDP growth is 10%. Usually financial services is a multiplier on top of nominal GDP growth. So let's take 12 to 14%. On top of that, there are market share gains for HDFC Bank, ICICI Bank, private banks in general. So just because of this dynamic, which is 12 to 14% sector growth plus market share gains, you can easily get to about 15 to 17% growth. On top of that, if you are doing well, if you are gaining market share even from your private banking peers, you can get to 18 to 20%. If not, you can easily do between 15 to 17. So that should be the expectation. Secondly, are they too large? Have they become too large to grow at their historical growth rates now? Kotak Bank today has 2.5% market share. Bajaj Finance has 2% market share in the lending industry. ICICI Bank, Axis Bank have anywhere between 5 to 8% market share. So that's the market share that we are talking about. It's not that they have already reached 20-25% market share. American banks are, the large ones are at 15 to 20% market share. That's how large the American banks are. So SBI, for example, is adding a Bajaj Finance to itself every quarter. HDFC Bank is adding a Kotak Bank to itself every year. That's how large the space is. That's how large the opportunity in India is. So at least for the next 5 to 10 years, I think around 15 to 18% growth from even some of these large players should not be a challenge.
So is it the same for even insurance companies?
Same case, yeah, it's absolutely same for even the insurance companies. LIC, for example, still has about depending on which year you look at, anywhere between 40 to 50% market share. The private life insurers, the largest one, HDFC Life, would have a 10% market share. Again, a long way to go. Plus, insurance penetration in India is significantly lower. ICICI Lombard also, same case.
One question from the back, see Rajat.
I have a question. HDFC Bank, as of now, trades at around 3 times price to book. Do you think this valuation is sustainable given the fact that many NBFCs have now improved their distribution and reach, and they are very quick in giving loans also compared to some of the big banks? And another part of this question is that if you've read this report, that we are at the we have almost completed our deleveraging cycle, which started 7-8 years ago in 2015 when the first those loans got exposed, but the NPAs started. No, so given that, and also the fact that a lot of capital goods companies have reported good earnings and they're saying that they're receiving orders, who's going to finance those loans is going to be the PSU banks, because they are the ones who, or maybe something like an ICICI bank. So they have the experience of corporate loans. So my question is, will incremental money not flow towards these banks simply because the rate of change is much higher there? That's my point. At least for the next 2-3 years, if not 10 years.
Corporate lenders versus retail lenders.
Sure. So, corporate versus retail lenders, till about 5-7 years ago, that differentiation used to be quite stark. Axis Bank, corporate lender; ICICI Bank, corporate lender; HDFC, Kotak, retail lenders. That differentiation used to be quite stark. But if you go back in history, HDFC Bank was only a corporate banker. It did not know how to do retail lending, because Aditya Puri's background in Citibank was corporate banking. By the time it was 2001, 2, 3, they started doing retail lending, became the largest auto financier, started doing credit cards, and then gradually their book started shifting towards retail lending. If we were to speak about today, ICICI Bank's loan book exposure towards retail lending is much higher than corporate lending. HDFC Bank's exposure towards corporate lending as a percentage of loan book is higher than now ICICI Bank. So Axis Bank, ICICI Bank, HDFC Bank, Kotak Bank, which used to be on different sides of retail corporate, have now largely become similar, with actually HDFC Bank having a higher share of corporate lending. So all of these banks used to be quite different, I would say 5-7 years ago. Now they've become much more homogeneous, much more similar to each other than earlier. So that's one. Second is whether price to book of 3 will remain or not. Very difficult question to answer. I don't think anyone has that answer or can answer that with a lot of conviction. But what we can answer with a lot of conviction is, let's say it does not remain 3 times price to book. Let's say it becomes 2.5 times price to book. Let's say it becomes 2 times price to book. That is 30% derating. Let's say it derates by 30% over the next 5 years. 30% derating over the next 5 years would mean a minus 6% or a 5% CAGR. But if they are growing at 18%, you do plus 18 minus 5, you'll still get the 13% number that we are talking about. If they don't derate, then it's a bonus, you still get 18%. If they re-rate, then superb.
Tej, I have one more question from your industry. There is a lot of discussion regarding wealth management. There is a lot of discussion regarding broking companies, asset management companies, companies which are giving platforms for investment. And we are in some sort of a bull run. So people have apprehensions that whether these 10 crore accounts, they would survive, whether they would keep growing at this stage. People have started giving multiples of 40 and 50 times to wealth management companies. So what is your take on the long-term sustainability, growth, and also the multiples valuation at which these are trailing? And can you give 1 or 2 case studies from a long perspective, 5 years, 7 years perspective, that how one can look at these, how can one can examine from some practical example?
Sure. So I think again, the fortunate part is that over the last 5 years, a lot of these capital market companies have become listed. So for example, market infrastructure companies were not a part of the market till say 5-7 years ago. Whether it be CAMS, whether it be CDSL, whether it be now the asset managers. Asset managers were not listed till about 2018, 2019. So now we also have asset managers. On top of that, we now also have some wealth managers. So I think this is a part of the evolution of financial services in India, which is that over a period of time, we need to understand we started out with only PSU banks being listed. Then there came the private banks. Then there came the NBFCs. Then came the insurance companies, and now we also have these wealth management companies, asset managers, capital marketplace. The way capital marketplace work, not only in India but also globally, is during a bull run, they see superb earnings growth. On top of that, they also get a great multiple, because everyone believes that the bull run will last forever. During a bear market, they neither get earnings growth nor do they get a good multiple, and the market starts believing that the bear market is to stay forever. So these companies, like I like to say it as, these are leveraged plays on the stock market. These companies will give you great returns on the upside and might disappoint on the downside. But from a valuation perspective, it's a great time to buy when these companies or the market in general are in a bear market. It's a great time to buy because you'll get on the upside both things. You'll get great earnings which will surprise everyone, and plus multiples will re-rate. If you were to look at the market landscape today, we, for example, in one of our portfolios own a company called Prudent Corporate, which is a distributor of mutual funds. As a distributor of mutual funds, it is the one which helps people get in SIPs, and it's today the second largest distributor of mutual funds in India, which is not a bank. It makes about 300 crores of profits every year, and this is all free cash flow, which does not need to be reinvested like a bank or an NBFC. It can be distributed to shareholders. That is why, and the reason we own it is that we believe that this culture of 10 crore demat account holders, number of SIPs increasing, we're now seeing about 17,000 crores of monthly flows into SIPs, all of that is likely to continue, especially if you were to take a longer time train. It will of course go through multiple cycles of ups and downs, but from a longer term basis, this looks like something which is only likely to increase.
Thank you, Tej.
Thank you.
I think he opened a wealth of knowledge before us, and the least we can do is honor him with a memento. I call upon Vanna Gupta madam. Big round of applause. And Vikash Kumar sir. Please give a memento to our session chairman, Shri Anil Sharma sir, as a token of our gratitude for his words of wisdom. And I request Mr. Vibhor to please come and give a vote of thanks. Coming up, so I think we should all keep our hunger for knowledge alive. Mr. Sushant is here from already. Yeah, Mr. Sushant from Ambit is already here. So he is dealing in billions of dollars, and I am sure we'll have new vistas, new knowledge waiting for us.
Already everyone has said everything in your favor. So managing 600 CR funds at your age, so we all get a very good morale booster, because we are not able to manage whatever small funds we have at this age, and also with such responsibility. So I thank you on behalf of BVSS. We look forward again very soon. Thank you.
We will be breaking for lunch and we'll assemble back sharp after half an hour. We have a very interesting session by Mr. Bhansali. So everyone is requested to join back in 30 minutes.